Mr. Muhammad Edi Yusuf, Assistant to Deputy Minister for Estate Crops Agribusiness Development, representing Honorable Madam Dr. Musdalifah Mahmud, Deputy Minister for Food and Agribusiness, coordinating Ministry for Economic Affairs, Republic of Indonesia, and Honorable Yang Berbahagia Datuk Ravi Mutaya, Secretary General, Ministry of Plantation Industries and Commodities, Malaysia. Selamat pagi, good morning to all distinguished speakers, panelists, guests, and participants. It is my honor to welcome each and every one of you to a webinar event on opportunities and challenges for palm oil producer countries, or OCOPOP for short, organized by the Council of Palm Oil Producing Countries, or CPOPC. My name is Radinka Basuki, or Dinka for short, and I will be your MC this morning. Today, we are extremely grateful to have two opening remarks by Mr. Muhammad Edi Yusuf, Assistant to Deputy Minister for Estate Crops Agribusiness Development, representing the Honorable Madam Dr. Musdalifah Mahmud of Indonesia CMEA, and Honorable Yang Berbahagia Datuk Ravi Mutaya of Malaysia's MPIC. So without further ado, it is my honor to give the virtual mic over to Papa Edi Yusuf for the first opening remarks. Good morning, Pa Edi.
Good morning.
Thank you. So the floor is yours, Pa. Welcome.
Okay, thank you. Thank you. Good morning, all. I represent here my Deputy Minister, Ibu Musdalifah Mahmud. That is not good conditions. First, allow me to extend my greeting to my fellow SOM leader, the Honorable Datuk Ravi Mutaya, Secretary General of the Ministry of Plantation Industry and Commodities Malaysia. Yang berbahagia Tan Sri Datuk Dr. Yusuf Basiron, Executive Director of the Council of Palm Oil Producing Countries, CPOPC, and to fellow eminent speakers and panelists, Mr. Muhammad Haris Arshad, Mr. Bernard Lim, Mr. Lu Hu Chun, Mr. Thomas Milk, Mr. Yuar Unitans, Mr. Togar Stanggang, Mr. Julian Megel, and Mr. Muhammad Fadil Hassan. Distinguished guests, ladies and gentlemen, very good morning to all of you from Jakarta, Indonesia. I am delighted to give this opening remarks at this webinar on opportunities and challenges for palm oil producer countries, OCOPOP, organized by the Council of Palm Oil Producing Countries, CPOPC. This webinar meets one of the 7 objectives of CPOPC, which is to strengthen cooperation and collaboration among other palm oil producing countries. At today's webinar, all the palm oil producing countries, including CPOPC observers countries, are invited to meet under one collaborative platform to inform and update the palm oil supply, demands, and price situation and forecast for the next immediate years. I believe that we must develop our supply and demand balancing strategy to ensure that the current bullish market price will remain sustainable. We would also like to listen from all our stakeholders about the threats and opportunities that we can formulate into strategies for consideration and adoptions. Today's critical discussion takes place 1 week before the Indonesian Palm Oil Conference, IPOC, on 1 until 2 December next week. IPOC is a unique to Indonesia as one of the main producing countries of palm oil, while today's meeting is CPOPC reflection on the industry after the CEO forum conducted at the margin of CPOPC ministerial meeting last February. We appreciate CPOPC who has taken follow-up steps, includes developed a policy and strategy directions, instituted CPOPC scientific committee to identify, evaluate, and recommend useful research projects, commissions a positive palm oil advocacy campaign in EU, consuming countries and CPOPC members countries, and also organize several webinars to create and educate awareness about the positive contribution of sustainable palm oil. Ladies and gentlemen, moving forward, we need to be constantly vigilant on the development on the global vegetable oil market. We have to be a step ahead to anticipate and better educate ourselves in mitigating and managing our important revenue earning industry and continue to support the palm oil sector in pandemic and endemic times to attain good yields and production capacity. Some pressing issues that are important to monitor, such as the supports to the palm oil sector during and post-pandemic time to attain good yields and production capacity. The forecasted vegetable oils demands and the strategic position of palm oil producing countries to feed the world and improve the welfare of smallholders. The market and price uncertainties posed by the pandemics and the importance to keep an eye on the bearish factors, including weather conditions, to affect the production of palm oil and other vegetable oils. The strategic importance of biodiesel mandatory programs to be implemented by producing countries as a sign of unity, coherence, burden sharing, and share responsibility. A call for government and business to watching over and responding to the unfolding policy development in the EU and other trading partners, and the importance to sit in the same platform and direction to escalate programs and maximize impacts. The importance of being insistent on the qualities of palm oil compared to other vegetable oil, especially on its sustainable development contributions. The need for member countries to be guided by the approaches undertaken by ASEAN and the EU Joint Working Groups on palm oil, particularly in advocating sustainability standards for all vegetable oil and benchmarking to the UN's SDGs 2030. Also, more coordinated action to harmonize policies by palm oil producing countries. And our mutual support for our respective lawsuits against the EU RED II and its delegated act at the WTO. Ladies and gentlemen, Indonesia has designed the downstream palm oil industry development roadmap to increase productivity and support downstream activities, create ecosystem, implement good governance, improve capacity building, and develop technology to boost palm oil business. This roadmap not only about a demand and supply issue, but also a greater control of the whole supply chains of the industry. For that to happen, Indonesia must create a conducive ecosystem, including more investment in downstream industries. I have highlighted some perspectives and issues that might be of interest for this webinar to discuss as part of our efforts to make our approaches more coherent, coordinated, and effective in leading this precious industry. I hope that the participants will take the opportunity to engage the experts and the panel discussion in formulating strategies for sustainable supply, demand, and remunerative prices of palm oil. We welcome any advice and recommendation that could collaborate and undertake adequate measure to sustain the bullish price of palm oil. Ladies and gentlemen, before concluding, I would like to thank all the speakers, panelists, distinguished guests, and participants for attending this webinar. My sincere thanks also to the CPOPC Secretariats for the arrangement of these online events. Also, I would like to see you all next week at the Indonesian Palm Oil Conference, where I encourage you all to bring your active participants and ideas to this event. Lastly, I truly hope that today's webinar can facilitate fruitful discussion and inspire all participants to believe that the palm oil industry is here to stay sustainably and remuneratively in 2022 and for many years to come. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Very much, Paidi. That was a really nice, wonderful, and uplifting remark. So thank you once again. Now it is my honor next to invite Dato' Ravi from Malaysia's Ministry of Plantation Industries and Commodities for his opening remarks. Dato' Ravi, good morning from Jakarta.
Yeah, good morning. Thank you very much.
Yes, the floor is yours. Thank you.
Yeah, thank you. Mr. Eddie Isof, Assistant to Deputy Minister for Estates, Crop, Agribusiness Development, Coordinating Ministry of Economic Affairs Indonesia, Tan Sri Yusof Basiron, the Executive Director of CPOPC, panelists, members from CPOPC Secretary, distinguished guests, ladies and gentlemen. Salam Jatra and a very good morning to all of you. I'd like to take this opportunity to convey my appreciation for the organizers who have done a splendid job organizing this webinar, as well as for most of you who have taken up your valuable time to be with us, all in the interests of the palm oil industry. Ladies and gentlemen, it is with great pleasure that I'm able to deliver the opening remarks in today's webinar, which is themed on outlook for challenges and opportunities for palm oil producers, or in short, OCOPOP. The objective of OCOPOP webinar today is to provide a platform for interaction and discussion for all stakeholders, especially on three key aspects of the palm oil industry, namely in relation to supply, demand, as well as price in the global market. There's a need to develop a balanced supply and demand strategy to ensure that the market price remains remunerative for the industry, so that it provides a sustainable livelihood for the smallholders as well. The discussion on formulating strategies for sustainable supply and demand and remunerative prices of palm oil will focus on concerns faced by producers. Hopefully, this will find ways through improved collaborations to mitigate threats, challenges, and to develop opportunities for palm oil producers. I'm confident the webinar will give many insightful ideas and valuable thoughts for us to bring back and work on it when we return home. I mean, we are already in our respective places, and there's a beauty of having this in webinar. Ladies and gentlemen, as we know, the palm oil industry has been the backbone of agriculture commodity sector in Malaysia for many years and continues to be one of the main economic driver of the country's economic development, contributing quite a portion to the national gross domestic product, as well for foreign exchange earnings. This sector is one of the top 3 export earners for Malaysia. And apart from that, this industry has also generated employment opportunities for more than a century now, and have uplifted and played an important role in uplifting the socio-economic aspect of the people, especially those in the rural areas. Touching a bit on the COVID-19 pandemic, definitely this has affected the agri-commodity sector, not only in Malaysia, but also throughout the world. And in 2020, we see a drop of about 3.6% as compared to 2019 in terms of production of crude palm oil. And export, likewise, has also declined by 7% to 16.2 million tons compared to the 2019. This is largely attributed to restriction on the importation of refined palm oil by certain countries, especially India, during the first 6 months of the year 2020. And as all of you are aware, COVID-19 cases around the globe is on the decline. And I believe now countries have taken measures to revitalize the economy. And definitely this augurs well for the palm oil industry, where we see that the the HoReCa industry or the food service industry has regained its momentum, and this will definitely bring more good news for the palm oil industries in general. Ladies and gentlemen, the recent crude palm oil price rally since June 2020 was, as you all know, is driven by supply disruptions in key edible oils as well as palm oil producing regions. And CPO has traded at about US $1,230 per ton. And as we have seen on the 15th of October 2021, this is our historic price in the palm oil industry. Price of palm oil is expected to trend downwards, I believe, as more producing countries are able to harvest the fruits and export with export opening up markets and opening up markets, we believe prices will soften a bit, and also this may lead to a bearish market sentiment. So hopefully, we as producing countries need to take the appropriate measures to ensure that so we are able to get a fair price, as well as be prepared to face any kind of challenges, especially from market that are quite which has a negative sentiment on palm oil. Furthermore, the series of negative narratives towards palm oil is never-ending issue. We have seen it start with reports claiming palm oil is filled with saturated fat, contributing to coronary heart disease, as an example. Later, we see that the Renewable Energy Directive 2 have categorized palm oil as high ILUC, indirect land use change, and will phase out palm oil based biofuel gradually in 2030. Recently, we are informed that palm oil is the only target for high ILUC, as we have taken soybean oil out of the list. In addition, many countries, especially EU member states, have begun to transpose the EU Rate 2 into their local law, which will indirectly ban, or rather put the palm oil-based biodiesel at the disadvantaged position. Lastly, palm oil has often been linked to food safety and health issues against such as containing high 3-MCPD and now recently on mineral hydrocarbon oil, which is found to be also present in some of our products. These are some of the challenges that is posed by the industry, and it is imperative for us to counter-narrate the claims with evidence-based facts to ensure a more sustainable industry. So before I end my opening remarks, I would like to take this opportunity to thank the organizers for holding the seminar. Hope by the end of this session, each and every one of you will bring back something positive and also will be more well aware of what is happening in the palm oil industry globally. And this may help us to understand the tests, or rather the challenges that we are facing today. And also we must not, we can say here that palm oil definitely will provide more opportunities in terms of product application as well as other users. And definitely this will not stop other edible oils from countering those claims that palm oil is making as we continue developing, advancing the palm oil industry. So on that note, thank you very much, and for giving me this opportunity to deliver these opening remarks. Thank you.
Thank you very much. Thank you very much, Dato' Ravi, for your remarks and your insightful words. Thank you once again. So ladies and gentlemen, now let us begin with the first session of the webinar. Today, we will have 6 key experts presenting their papers for us. So please make use of their knowledge and wisdom to understand the industry and the market analysis. We would also welcome participants to start posting your questions in the question box after each presentation or during the webinar session itself. And all the questions will be tabulated and presented during the panel discussion. And we hope to be able to respond to as many questions and also feedbacks as much as possible. So thank you. Right now, first to present her paper is Ms. Liu Hui Chen. I hope I pronounced that correctly. Director of the ASEAN Plantation Research, UOB Kai Hian, to present her paper on palm oil production in Indonesia and Malaysia, challenges and outlooks in 2022. So good morning to you, Ms. Hui Chen.
Hi, good morning. Thank you so much for your introductions.
Yeah, sure. So the floor is yours.
Yeah, let me share my screen now.
Sure.
Are you able to see the screen?
Yes.
Yes, clear.
Okay, thank you.
Fantastic.
Okay, yeah, on the presentations mode, right? Yeah, good morning. For the kind introductions, and then thank you for CPOPC for inviting me to make my presentation with the title of palm oil productions in Indonesia and Malaysia, the challenges and the outlook in 2022. So there's a quick introduction. So I'm the plantation analyst with UOB KN for the last 20 years, overseeing all the plantation counter listed in Bursa Malaysia, XGX, and IDX. Okay, this is the usual disclaimer that we have. I think today my discussion topics will be covering these 3 major areas. I will run through the productions, some of the challenges for the productions going into 2022. I will also highlight some of the key developments globally that we need to take notes that could impact the sector as well, and what these challenges and the development would have an impact on the palm oil production going forward. So before I start off with the challenges, let us look at this a quick review on what is our production so far for the first 10 months of 2021. If you look at it, actually the productions for 2021, it was of a surprise to the market. It's underperformed and below the market estimations since the early of the year. We have seen market keep revising down the productions number. If you take a look at the Malaysia production has down by 8%, and across most of the state is lower. And looking at Indonesia, if you look at the GAPKI number for the first 9 months, productions are quite flattish. I think if you recall earlier the years, market do expect Indonesia to produce at least additional 1 to 1.5 additional millions from tonnage from Indonesia this year. However, we are looking at quite a flattish. This is some of the performance for the companies that have announced their 9-month reductions. Okay, I think overall companies that has been guiding that 4th quarter numbers will be even lower. That will bring quite a challenging production outlook even in the 4th Q. That will be set the tone for the 2022. What's the price outlook look like? I think let me go into my core presentation. In my opinion, palm oil production will remain very challenging, even going into the first half 22. Of course, the main challenge to us for these sectors, for oil palm sectors, is the very stagnant and declining yield. I will attribute this poor yield performance to a very poor field upkeeps. If you recall that, in terms of the field management side, we are seeing that the fertilizer applications on the ground has been behind the schedule. This could lead to a very slow yield recovery. A lot of questions posted why Malaysia, Indonesia productions has been quite low, even taking longer than usual recovery process from the dryness in 2019. I will attribute this partly to the low fertilizer that we started to see. Fertilizer application were cut down significantly due to low CPO prices back in 2018, 2019. Despite the very good prices in 2020 and 2021, the applications is behind the schedule due to the high rainfall and also disruptions of logistics. So we are seeing that this has actually have an impact on the process of the yield recovery. And second thing, also because of the lack of the labor, especially from Malaysia side, we are looking at we are seeing that the round of rate baiting is reduced, and increasingly in Malaysia we are seeing the rising red damage on the estates. This is also attributed to the lower FFA yield that we are seeing now. We are seeing less crops, and these problems are quite severe, especially in the Peninsula Malaysia side. We have to really look into that. The estates management need to beef up to reduce these damages. Of course, the next things that to highlight is we are seeing a rising amount of Ganoderma infections. I think this is not only to Malaysia. I think increasingly we are also seeing some of the older estate and the replanted area in Indonesia also start seeing this Ganoderma infection. I think I would attribute this rising amount of infection as due to the lack of field inspection. Of course, in Malaysia, there's a lack of workers on the estate. This is one of the main key reasons. We are seeing that we are losing more trees per hectare. In some of the estate, in some of the state in Peninsula, we are seeing this problem because this is mostly the second generation planting. The problems are more severe than those in Sabah and Sarawak, but increasingly Sabah also having quite a severe issue on this as well. So this all have to attributed to the lower yield, and think this is maybe one of the areas that a lot of managements, plantation companies, all this management need to put a lot of emphasis on how to beef up their field upkeep to maintain and to increase their FFU performance. Next, we are looking at it. Of course, this is quite a well-known problem, which we have an acute worker shortage in Malaysia. So, of course, based on the latest press statement from NPOA, I think they have highlighted that the shortage of workers is as high as 75,000 in Malaysia. Based on their surveys done in January 2020, at least on the harvester side, for about 41,000 deficit. That was back in January 2020. I think the current problem is more severe than what we are seeing in the numbers are given in based on January 2020 survey. Of course, lately you have heard that Malaysia has approved 32,000 workers to come in. This is supposed to come as soon as possible. But are we really seeing the workers coming in? I think is that possible that we see within the next couple of weeks? I think these are questions to be answered. I think, in my opinion, it's quite tough. We may start to see some of the workers that have the permits who have gone back to their countries, the home country, taking a leave, and they are stuck there before, when the COVID pandemic outbreak, the lockdowns appear. I think with the lifting of the traveling, I would say this first batch of people will start to come in pretty soon, maybe the earliest by end of the year or beginning of January next year. So if you look at it, what is this damage to the Malaysia production? So based on the Malaysia planted acreage and the yield that we are looking at it, based on our estimation, Malaysia have a very good potential to produce a CPO up to about 22.3 million tons. So this is based on my assumptions and also on the acreage, based on the matured acreage that we have today. So if you look at it, I think at the normal shortage, labor shortage, Malaysia have never had full labor force. With the turnaround, we always see that there's easily around 5 to 10% shortage. With the shortage of like 15 to 17 harvesters at any point of time, we estimated this labor shortage actually have led to a loss, CPO losses about 1.3 million tons. At current stage, based on our ground checks, I think the worker shortfall is as high as 20-30%. Even some companies are telling us that the shortfall is as high as 35 to 40%. So based on this worker shortage, actually, if you based on the use that we can produce, Malaysia can produce, the estimated CPO losses for the years is as high as 3.2 million tons. So if you look at it from the 22.3 million tons of potential, we have lost easily about 3 million tons just due to the worker shortage. And on top of that, remember, we will talk about the poor field upkeep that attributed to some crop losses as well. So other issues that are arising from the worker shortage, of course, the loose food collections are not up to the date. And of course, I have just mentioned about the poor field upkeep. So this is still the issues that is still challenging. In my personal opinion, I don't think we are getting the workers coming in very soon. I think we are seeing a small amount of those that with permits and with visa that will be coming in starting from the next month. And I will say, even for the full years, next year, 2022, are we able to take the 32,000 workers? I think this is something that was still questionable. I think we'll be very happy that if this number, 70% or 80% of this number can be achieved in 2022, I think that will be a very great help to the industry. So let's move on into the sector challenges. I think there are a lot of challenges for the sectors, but I just highlight the main three. I think the next one for the challenge to the industry is a spike in fertilizer prices. If you look at the fertilizer, this is the three main fertilizers that has application for the oil palm estates. If you look at the prices since mid of the year, the prices have gone up. Most of the prices are up more than 100%. And those three ingredients are the main breakdown of the fertilizer component. Easily, you look at the nitrogen, potash, and also the rock phosphate. These are the major things, and you are facing this cost increase. And based on our estimation, at the fertilizer cost per hectare, it purely based on today's prices, the cost compared with December 2020, the price for straight fertilizer have easily gone up by 158%. And even for the compound fertilizer, prices have gone up by about 100%. So this is a very challenging scenario for the plantation company in 2022. So year of 2021, companies are facing the labor shortage, the challenges due to the COVID pandemic, and year of 2022, companies are facing high in the operating costs, especially coming from the fertilizer. And on top of that, also you have the minimum wage adjustment in Indonesia. And I think Malaysia companies will also face higher wage adjustment in coming year for 2022, especially on the harvesting cost side. I would say these three are the major challenges for the sectors. And these three will be one of the key drag factors for the production potential in going into 2022. So if we move on to the next topics that I would like to highlight is what are the developments that could make an impact to the sectors. I think this is one of the major things that I would like to highlight is the global biofuel trend. I will show the next one. We have a couple of speakers who will touch more details on these topics, but just want to highlight the decarbonization policy globally is a new trend. And then this is, of course, due to the global warming, climate change issue. We are seeing that more countries are coming up with all this decarbonization policy. Some driven by the environmental, some country because of agricultural surpluses that we need to maintain. And of course, the third issue will be on the energy securities. So I think there are also various incentives introduced by this country in order to reach the compliance and also the mandate. We have seen we have the tax credit, we have the biodiesel, the blended tax credit, the greens, the LCFS, and it's also the incentive given in Indonesia. So these are various incentive and tax credit that are given out globally to achieve the goal, this green policy goal. I think if you could look forward, I think the renewable diesel, the 100%, the renewable diesel likely to be the lead going forward. And the main market of our renewable diesel that highly mentions in the current market will be on US side. If you look at US itself, US renewable diesel will be a game changer to their soybean market, and they will actually change the soybean balance sheets in US. If you look at it, just based on the announcements of the new renewable capacity coming on stream, that's a compilation by EIA based on the under construction and those proposed or announced. We are looking at easily the capacity of the renewable diesel in the US will increase from 0.6 billion gallon per year at the end of 2020 to close to 5.1 billion gallon per year by end of 2024. If all this new capacity coming on stream. I think if you look at it, why there is such a strong surge in the capacity in US, thus you have to thanks to the various state and the federal tax credit and also incentives given in US. If you look at the incentive given, of course, first of all, we have this blended tax credit. Pardon of this typo, there's a blended tax credit, BTC, which is about $1 per gallon. And this tax credit is extended until the end 2022 and was subject for renewal. And in the past, renewal usually will come. And this gives translate into approximately about $339 per ton. And you also have this RINs, which is RIN credit, which is currently about $530 per ton. And for those that are producing renewable diesel, they are they're used in producing in California, Oregon, Washington, and more to come. There's actually given additional credit, by if you use producing the renewable diesel. That is why the renewable diesel is going to take place, and some of the conventional biodiesel will be phased out by this new capacity. Okay, so you will get additional about $150 per ton of credit. If you added all this, that is make it why renewable diesel capacities are growing, like booming in US, because add up all these incentives, the producer will easily get additional $950 to even like $1,000 of incentive, tax credit and incentive. So that make the very viable for them to actually go into this. That's why we're seeing a lot of conversion from a conventional mineral refineries into a renewable diesel facilities. Of course, the next question is, do US have the enough soybean oil for the market? Of course, in response to this increased demand from renewable diesel going forward, we are also seeing a lot of companies actually putting in, the crushers are putting in investment as well to increase their crushing capacity. So this is the crushing capacity coming on stream based on those that are actually under construction and also those are announced. I think if you look at it, we are easily seeing additional about 3.3 million metric tons, approximately about 1 billion gallon per year edible oil, edible oil by 2025 to meet this. But however, if you look at the kinds of a gap, I still don't think that this is enough if all this coming on stream. So what we have done here is based on this capacity, the current existing capacity, and those capacity under construction, only taking into capacity under constructions in US. This is how we work out. We think that US could be a potential net soybean oil importer by the year 2024. So this is the balance sheet that we work out. This is based on the long-term projections by USDA, and we incorporated the capacity coming on stream into the second table here, based on the 50% crushing, because the US only crush about 50%, and the breakdown of 50% renewable diesel and 50% the conventional biodiesel. We think that US actually by next year, by 2023, 2022, there's quite tight. There should be, if actually adjusted the domestic, the exports number, so they still have a room. They may be self-sufficient in 2022 and 2023. If they increase the crush, their own crush, they still be able to actually very much marginal, just enough for their own use. But if the capacity is not coming on the crushing capacity don't come on stream on time, then potentially 2024 will be the year that US will become a net soybean oil importer, and that will change the whole global balance sheet. Veg oil balance sheet, because if you look at US is one of the major soybean producer, as all we know, and the soybean oil inventory in US is actually about 20% of global soybean oil inventory. So if US consume most of it themselves without any leeway for export or any reducing the inventory, actually they will be taking out about 20% of the soybean oil from the market. So that's actually will change, and who will be fulfilling the conventional market for soybean oil. I think by no doubt, I think palm oil is one of the highest potential because of the consistency in terms of production. And also we are seeing that more production is coming from palm oil. That's a very good room for the palm oils to expand their market share for the conventional usage in the food and in the industrial side. Of course, this is something that we need to watch out. It's really very interesting to monitor this. And I think this will actually change the global veg oil balance sheet. Of course, the next development that we need to watch out is on the La Nina. So my title is La Nina. Again, of course, we have the La Nina in last year and last year to beginning of this year. And now NOAA and even the BOM or Australia have warned that La Nina, there is about 70 to 80% of the chances that La Nina will come again by December, and it will last until the February 2022. So of course, La Nina impact is not only on palm. If you look at it, La Nina impact will also in other crops. So this is a map to show you what's the impact and what other crops will be affected by La Nina. Of course, for us in the palm industry, the most important thing is the La Nina impact on the oil palm trees. Of course, you will see that usually the harvesting round will be affected, the evacuation of fruit will be affected. But also, I think this is something that we have to take notes also, the low sunshine hour that resulted to less radiation for effective photosynthesis caused by lower OER. If you look at it over the last year, especially 2022, we have a very low OER, even the first half of the year. And I will attribute this to a low sunshine hours. If you speak to some of the companies that actually, those companies have captured the sunshine hours data, they can see the correlation between the low sunshine hour to the low OER for their estates. Of course, you have during the rain season, the low pollinations, beavers are start getting lazy. They are not able to come out to do the pollination in the morning, and you'll see the populations of beavers will be dropped as well. So these are all the impacts from La Nina that we will see a very short-term impact to the production, to the FFBU, to the OER. And bear in mind, when we are suffer, our parts of the country, we are suffer high rainfall. We don't forget about the soybean side. What we are seeing, the current high prices, because the last La Nina have give a very severe dryness to the soybean producing regions. Of course, they are still able to come up with a better production because of their seeds is now more dryness resistant, weather resistant after a couple of weeks genetic modified. So, but still have to bear in mind, if this La Nina come again, the regions that will be hit again will be on the South America, the Brazil and Argentina. December and February, even I think January is very critical. If the dryness continue, if the dryness go worse in Brazil in the month of January, which is the time that the soybean is setting the pod, I think this is very important because how the yield potential will depending on this season. How well is this stage? You know, if the dryness affected this pot setting seasons, I would say the yield from Brazil will drop. I think if La Nina continue to have a very bad impact on the soybean crops in Brazil and Argentina, we can see the tightness of the global oil seeds will continue. And we have seen that the stock to usage ratio for palm oil and soybean have been dropping, especially on the soybean side. We have seen from the up and down, we are seeing the decline, and we are not seeing this recovery. So usually after the severe, if you look at it, there was the last previous La Nina, it will be a very strong recovery in terms of SU ratio for soybean, but we are not seeing this time now. That is why the prices have been stubbornly high. Coupled with that, we have a very high supplies and we have a new demand coming from the biofuel side. That resulted to a very steady and low SU ratio for last year, this year, and going into 2022. So if you look at it, the SU ratio for soybean market is not very high. For palm oil, not very high either. So if the La Nina continue and it's a strong La Nina, of course, at this point, markets is looking at mild to moderate. If the La Nina continue to be like what we've seen last year, then this supply tightness could prolong into year of 2022. So these are the events that we need to watch out. Of course, I think the next challenges to the sectors or that could change the sectors is the policy changes in the three main importing countries. I think just now during the opening remarks, we have seen we have seen the highlights of the non-trade barriers from the EU that we need are giving a lot of barriers to the entry for palm oil that include the RED2, the freeze on the use of high risk ILUC for the biofuel. So as mentioned, the palm oil will be phased out complete by 2030. And of course, the new proposal for a regulation on deforestation-free products. These are the non-trade barriers for palm into the EU market. And also in India, the launch of mission on edible oil the oil palm. Of course, markets are looking at this with a doubt. Of course, how fast they can achieve the 1 million hectare. Will they have enough of land, the capital, or are the people willing to switch to oil palm because of long gestation period from the new planting? Of course, I think this one we still have to, the time will tell whether this will achieve or not. But in any case, if even they achieve the targets of 1 million, we still think that India is not going to be a net oil importer. India will still be highly dependent on the veg oil import. And that will only, if this achieved, that will only reduce the dependencies on the import to about 45 to 50% from currently about 65 to 70%. So this is something that we need to watch because India is the largest palm oil import country at this point. And the next move is something that is positive to the sectors is the development in China. I think in the previous CPOPC's webinar, I think one of the speakers did highlight China's have this blueprint to actually switch out to reduce the dependency of the animal feed on the imported soybean and corn. They will encourage more local crops like wheat and barley to be used as animal feed. That's something that's positive for the palm sector because reducing the usage of soybean meal in the animal feed will actually reduce the soybean crushing in China, and that will reduce the soybean oil supplies to the market. So I think based on the estimations, for every 5% of soybean meal mix reduced, that will reduce the soybean oil supplies by 700,000 tons. So that's something that's positive. Given that palm oils are getting a little more acceptance, slightly better acceptance in China now, we will see this could be an opportunity for palm oil to have more palm oil for palm oil to go into the China market to gain a better market shares. So of course, for these changes, ultimately for China's the crusher or the animal feed user are very realistic. Everything go back to profitability. As you see earlier the year, when using the wheat is better in terms of profitability, they do a very quick switch from soybean meal and corn meal to wheat meal. So China's are very, very fast in terms of changing their demand dynamics. So I think without our wrap about what are the impact on the oil palm oil production going into 2022. So this is what we are looking at for 2021. As mentioned, the production has been below expectation due to the dryness in second half of 2019, the La Nina in 2020, into the 2021 high rainfall, the low sunshine hour, the worker shortage, the reduction of the fertilizer application, and of course, the COVID-19 disruption to the operation, especially in Malaysia, we see a lot of assets have to shut down their operation due to the COVID cases. And of course, these challenges that we have discussed on top here is not only affect the 2021 production. We think these challenges will still would still limit the palm oil productions into especially the first half of 2022. So if you look at all this, we are still expecting, based on our expectation, we expect CPO production in 2022. Malaysia is going to only increase by 0.5 to 0.7 million tons, and Indonesia will only increase by 0.15 to about 2 million tons. For Malaysia side, we are only looking at maximum about 70-75% of the 32,000 workers coming in. So of course, the impact of this worker will only see in the second half. Because of that, we see bulk of the recovery of Malaysia production will come in during the second half of 2022. So I think with that, I will wrap up in that on the what are we looking at the price side. We think that the high prices for current, the elevated prices will stay into the first half of 2022. It may be lower than what we are seeing today, but it's still a substantial higher, of course, compared with the past. If you look at the past cycle during the previous La Nina, we have also El Nino followed by two La Nina, which is affected the soybean oil market as well. We look at the up cycle will last actually about 24 months. And as for our current cycle, we are in 18 months of the up cycles now. So how long are we going to see it? If you look at the production trend, we look at the inventory build up. So when are we going to see the inventory build up? Every cycle will end up where inventory have actually reached back the previous high or close to the previous high. So if you look at it, our previous high was about 3 million tons, about 3 million tons in Malaysia. This is Malaysia CPO end stocks. So are we going to see 3 million tons anytime soon? I don't think so. I think we will be happy if we can hit by 2.5 by the end of first quarter or even the second quarter. So I would say that with the inventory rebuilding coming on in the pipeline, prices will start to weaken, but we don't see prices will have a big crash. I think we'll see that there will be a gradual decline of prices in the first half, but still stay very much higher level than what we see in the first half of last year. And then we will see the weakness to come in the second half as we are looking at part of the incrementals of production will come in the second half. Bear in mind, we have a very low second half of 2021 in terms of growth will be quite a substantial growth because coming from a low base, we will see a substantial growth in second half of 2022, and that will bring the prices lower. And coupled with that, US also the next soybean production seasons will come from the US. And because of the high fertilizer, markets are expecting more soybean productions rather than corn. So I think that will be all the news that we are looking forward in the second half of the year that could actually kill off the upcycle momentum that we are seeing currently. So I think that in conclusion, just a very quick conclusion, palm oil production remain very challenging due to all this. The poor fuel upkeep will take time to recover. Worker shortage in Malaysia unlikely to see any easing anytime soon. And I think the insufficient fertilizer application could derail the recovery. Of course, the two major developments that we have highlighted is on the US decarbonization policy and also the La Nina. I think with that, we see that supplies outlook remain very supportive to the current elevated price. I thank you very much, and that concludes my presentation. Thank you. Back to you.
Thank you very much, Ms. Wei Chuan, for your informative presentation. And I'm very, very sure many of our participants here in the audience have taken their necessary notes based on your presentation. So thank you once again. So yes, kind reminder for all the participants who are present, you can start posting your questions in the question box now. And the questions will be attended to during the panel discussions by the presenters who will be participating during that very panel discussion. So up next, we have Mr. Thomas Milka, editor and CEO of Oil World. His paper is on forecast and analysis on 4 major vegetable oils in the world in 2022. Now, this is a recorded presentation from Mr. Milka.
First of all, I send warm regards from Germany. It is a privilege and a great pleasure for me to talk to you today about the global outlook for the 4 major vegetable oils. And I thank you for the invitation to this event. Easter Mielke, International Statistical Agricultural Information. We are a private company founded by my late father, Siegfried, and my mother. We are independent. We don't have any positions. We are not involved in trading, and we provide unbiased information. Today, I have to be very brief, but if you have additional questions, please feel free to contact me. It is my pleasure to be of service to you and to help you to better understand the global market. Edible oil prices have been much stronger than oil meals, very clearly here in the slide showing the oil world price indices in which we weighted the major edible oils with their respective share in world trade and also the meals. Soya meal has been relatively weak over the past 6 months, but this changed lately. The sharp increase in production cost is a concern to producers, particularly, primarily the steep increase in energy prices and the steep increase in fertilizer prices. What impacts will that have for the next crops? Vegetable oil prices showed remarkable strength in October and so far in November. Palm oil setting new record highs lately. Indonesian crude palm oil at a price premium to Argentine soya oil in November, a very rare occurrence. Multi-year highs lately. Look at the slide here to the left with the prices of soybean oil in Argentina substantially above the prices of the preceding 3 years and substantially above the latest 5-year average. The same with crude palm oil in red, significantly above preceding years. But we may have reached the peak. It's not sure yet, but the stage is set that production of vegetable oils will start increasing above the year ago level. Reactions to the high prices. Consumers have cut back usage mainly in the edible sector, but partly also in the energy sector. Farmers boosted oilseed plantings worldwide by approximately 9 million hectares. The fight for acreage with grains has limited the oilseed area expansion. In China and Argentina, soybean area, for example, has been reduced in favor of corn. Still, world production of 10 oilseeds is set to jump by 25 million tons in the current season to a high of 611. There are sufficient supplies of oilseeds to sharply raise crushings and to eliminate the current vegetable oil supply tightness. But, ladies and gentlemen, the transition of the tightness last season to more ample supplies is difficult, and apparently it takes longer than expected. Why is this so? Now, first of all, world supplies have become more ample, particularly of oilseeds, but the market sentiment is still bullish. This also affects farmers' willingness to sell. Farmers in many countries are still reserved sellers. They hold back. They are in a financially strong position. They hold back and wait for higher prices. Farmers today are no longer price takers. No, they play a pivotal role in price making. They have the ability to store a larger quantity of their harvest than in previous years. And we see this in the market. During the first 3 to 4 months of the current season, slow oilseed crushings of record oilseed supplies have kept vegetable oil prices high lately. In fact, and you know, we do this very carefully. We analyze monthly and estimate monthly crushings of stocks. And in fact, during September, November, world crushings of 10 oilseeds were down slightly from a year ago, despite higher production. Total world crushings were down. And this explains the high prices of vegetable oils. This explains that oil export supplies of vegetable oils in total have been relatively tight because the crush of oilseeds was slow, was even down slightly from a year ago. But this is resulting in large oilseed stocks worldwide in early 2022, in January. We anticipate a boost in oilseed crushings by 12 to 14 million tons from a year ago in January, August next year. we are updating, this week we are updating our forecasts, and we will release our new estimates on production, trade, crushing, stocks, and consumption and prices in the Oil World Monthly on November 26. So let us look at the individual oils separately. First, let us start with sunflower seed and oil. World production plummeted last season by about 5 million tons, but a substantial recovery by about 7 million tons to a record 58 million is now expected for the current season, raising production and export supplies for the full season. Big increases in Ukraine, in Russia, in the European Union. However, sun oil prices today are still very high, and they are still at a premium to Argentine soya oil. Sun oil should have been the price driver downward in a normal situation, but the current situation is not normal. Very slow farmer selling in Russia due to farmers protesting against the government policy of high export taxes. There is a high export tax of 30% for sunflower seed and for rapeseed. And on top of that, there is a high export tax on sunflower oil of currently $194, in December 277. And of course, the high export tax is translated into lower prices of sunflower seed offered to the farmer. So farmers are holding back. Russian sunflower seed crushings will be declining sizably in September, November, and they will be down again, according to our estimate, in December. So there is no pressure from sunflower oil export supplies. In fact, the world crush in sunflower seed in September, December this year is likely to be down despite the record crop. So slow farmer selling is critical, World crushings, however, is set to increase substantially by 5.5 to 6 million tons from a year ago in January, August. And then we should see price pressure. When this is going to happen, I don't know. It could be March, it could be April, but we are going to see increasing price pressure from unsold sunflower seed quantities in the course of next year. Second, soybeans and oil. Soybean production is set to rise by 17 million tons in the current season to a new high of 379 million. Production in the current season is, in our opinion, rising faster than consumption, resulting in a recovery of stocks, primarily in the USA, to some extent also in South America. There are still many uncertainties. Weather conditions in Brazil and Argentina, particularly in December, January, farmers selling, COVID, impacts of COVID, import demand of China, trade policies, government policies, and many more. Rapid expansion in South America, driven by area expansion, primarily in Brazil. Most of the growth in Brazilian production is based on rapidly rising area. For Brazil, we now anticipate the crop in early 2022 at 145 million tons. Weather has been favorable so far. There are still weather risks, of course, but production could also turn out higher. Some people talk about 147, 148 million tons even. Recovery in the US, 120 million tons, slightly less than expected, but still sufficient and still more than the market requires, resulting in accumulating stocks in the US. There is increasing dependence on soybean meal worldwide due to insufficient growth of production of other oil meals. However, smaller than expected soya meal consumption during the past 4 to 5 months has slowed soybean crushings, and also it has slowed the production of soya oil, primarily in China. But this is going to change. World soybean crushings are set to accelerate by 9 to 10 million tons in the current season. Consumption of soya meal is also likely to rise by 7 to 8 million tons, benefiting from tighter grain supplies. Soya meal feed grain price ratio very attractive at the moment. Also, the shortage of lysine is going to support soya meal usage, primarily in the US for pig feeding. So we are expecting a pickup in meal demand, and this pickup in meal demand will drive soybean crushings and will raise soybean crushings sizably next year in 2022. Soybean crushings in September, November was down slightly from a year ago. This was surprising due to lower than expected crushings in India, in China, and in a few other countries. But this is going to change. Summary of the world balance, production rising to 379 million tons, an increase of 17 million. Soybean crushings, in my opinion, set to accelerate by 9 to 10 million tons. We at Oil World, we expect soybean stocks at the end of this season to be the second highest on record at 104 million tons, which is up 6 million from a year earlier. US, big increase in the US, 10.7 million tons. Rapeseed and oil, world production on a declining trend, falling to a 13-year low of only 62 million tons. Low carry-in stocks further tightened available supplies in the current season. Canada lost as much as 7 million tons of canola due to drought in the prairies this year. This came totally unexpected and was a major bullish factor for vegetable oils worldwide. Canadian exports and crushings declining sharply. Small crops in the US, in the European Union, in China added to the tightness. Some relief comes from a bumper Australian crop, but overall world crushings of rapeseed and canola and world production and export supplies will be declining. Finally, the outlook for palm oil. World production of palm oil has recovered by only 1.5 million tons last season. This was a surprisingly small expansion. This kept palm oil stocks low and prices high. For the new season, we anticipate an increase in world production by 3.5 to 3.8 million tons. Malaysian production set to rise by about 1 million tons on the assumption that the labor shortage will ease sometime in the first quarter of next year if the government opens the door for foreign labor as recently announced. In Indonesia, we expect a relatively small expansion of 1.7 to 1.9 million tons in October-September 2021-22, and in the rest of the world by about 800,000 tons, led by Thailand and Colombia. So world production will become more ample. Still, the anticipated growth is lagging the growth we have seen in preceding years. In summary, Soya oil was relatively firmer than meal. Vegetable oils were relatively firmer than oil meals, but this has just changed. Soya meal prices have been very strong, as we can see in the slide to the right, over the past few weeks. Demand has picked up. There was concern about slowing crushings also in Argentina. In India, meal prices also picked up because of the shortage in lysine and the anticipated larger demand in coming weeks. The oils and fats market is dominated by palm oil and soya oil. Palm oil production is estimated at 79.4 million tons. This is our forecast, which we released in the Oil World Monthly at the end of October. A new update is now being prepared, and this will be released in the monthly of November 26. Palm oil has lost growth dynamics. A significant slowing down of new plantings, lack of replantings, several other problems in the palm oil industry. We anticipate that the annual average growth will lag considerably the preceding years within the next 5 to 10 years. Palm oil has lost growth dynamics, and global dependence on other vegetable oils will be correspondingly stronger in the years ahead. The outlook for all the production outlook for the four major oils, we anticipate production to rise by 6.3 to 6.8 million tons, the biggest growth in 4 years, following 2 years of global production deficit and a sharp decline in vegetable oil stocks. Now, vegetable oil prices are set to decline in 2022 if these forecasts materialize. Meal prices are likely to become relatively stronger and have to finance a larger share of the crush value. But as I mentioned, crushings of oilseeds were very small in the first 3 to 4 months of this season, primarily of sunflower seed and soybeans. This has kept vegetable oil prices high lately, but it has resulted in an accumulation of oilseed stocks well above the year-ago level, and we are likely to see pressure from accelerating oilseed crushings in 2022. With the assumption of about normal weather in South America in the next 1 to 3 months, we anticipate world production and stocks to rise sizably in the course of this season. We anticipate stocks to recover by 1 to 2 million tons following 2 years of deficit and declining stocks. In my opinion, the current high vegetable oil prices are not sustainable. Triggered by rising production and stocks, we at Oil World anticipate sun, palm, and soya oil prices to decline in January, June next year. The deferred positions already show lower vegetable oil prices. Just look at Argentine soybean oil, which is quoted at $1,259 for the March position and $1,188 for May, July. As of November 18, look at the RBD palm oil for Malaysia. Deferred positions show a considerable discount of about $100 from the nearby for February, March, and April, June is quoted at 1,153. Downward potential also for sunflower oil prices, also for coconut oil and palm kernel oil. With this, ladies and gentlemen, I'm at the end of my presentation. If you need further assistance, please don't hesitate and let me know. Thank you very much.
Great. Thank you very much. Thank you very much, Mr. Thomas Milka, for your valuable insights that I'm sure many in the audience would benefit from. Now, up next, we have Mr. U.R. Unitan. I hope I pronounced that correctly. He's the president of the Malaysian Biodiesel Association. And his presentation is on Malaysian biodiesel industry update. So good morning, sir. Welcome to the webinar, Mr. Unitan. Over to you.
Good morning.
Morning.
Can everyone see my slide clearly?
Very clearly, sir.
Yes, thank you very much.
Thank you.
Good morning to everyone, and thank you to CPOPC for inviting me to make this presentation today. As you can see from the title of my presentation, I am going to focus mainly on the Malaysian biodiesel industry update. My presentation outline would cover the latest information that I have gathered about palm biodiesel in Malaysia. I'll also touch on the economics of how biodiesel is working for local mandates in Malaysia and to some extent in Indonesia. We already have a fellow speaker who will spend more details on Indonesia. A word about EU regulations and its effect on the biodiesel industry is important for both Malaysia and Indonesia. Then I'd like to touch on some emerging trends that we are seeing and how this might shape things to come. And finally conclude with some idea about palm oil price outlook. So if you look at the Malaysian palm oil statistics over the years, since we have had significant production beginning in 2008, you will see that we had a record year in 2019 when production went as high as 1.4 million tons and record exports of almost 610,000. This, of course, has been seriously affected both in the year 2020 and for the first half of 2021. As you can see from this table, that 2020 we did only about 900,000 tons with an export of close to 380,000. What you will, of course, see is steadily, slowly but steadily, the local consumption with increased mandates has increased. And in 2020, we did close to about 800,000 tons. For the half year, we are more or less about the same trend as you can see in 2020. Exports, of course, with the EU regulations, the exports being kind of benchmarked to the 2019 cap, you will see that Malaysian exports, as I said, peaked in 2019, but is gradually dropping down. This year, I would expect it to be close to 300,000. The pressure from the EU with respect to the fact that there is going to be an impending ban on palm biodiesel, we are seeing challenges to the palm biodiesel exports or palm oil for the use of biodiesel in the EU. And both Malaysia and Indonesia have filed a case with the WTO challenging the EU ban on palm biodiesel. It's a space that we need to watch and see how this pans out. Again, this is the statistics of what the Malaysian exports is. This data is from Palm Oil Analytics. Palm Oil Analytics thinks that the export potential, at least in the year 2021, would be slightly over 300,000 tons. I personally don't think so. I think it will be just about 300,000 tons. But it shows a trend that palm biodiesel exports is dropping. The Indonesian exports, just to touch very briefly, is quite different from Malaysia since the anti-dumping duty was imposed on Indonesian biodiesel exports since October 2019. So you will see exports both in 2020 and 2021 is rather low at 3,000 or 7,000. So it looks like PME export from Indonesia, as far as the biodiesel industry in Indonesia is concerned, is quite insignificant. What is interesting, though, from an export perspective is that nearly 80% of both Malaysian and Indonesian exports lands in the EU. So the EU RED2 and its ban on palm biodiesel by 2030 is a serious subject for both countries to consider, that the single biggest export market is now looking at a bleak future. And this obviously will need to be factored in terms of what strategies both these countries adopt in terms of supporting the biodiesel industry. For Malaysia, if you look at the blending roadmap, we announced in February 2020 that we are moving to B20. But the implementation of that has got affected because B20 started in Langkawi in January, also in Labuan. By September, we started in Sarawak. But thereafter, with the COVID pandemic, the construction of all the facilities that were required got affected. And what was supposed to be rolled out in January 2021 in Sabah has now possibly got delayed to end of 2022. This is what we expect as of now. Similarly, Peninsula Malaysia was supposed to be by June 2021, also delayed to end of 2022. The 12th Malaysia Plan outlines B30 for transport sector by 2025 and biodiesel for the industrial sector gradually edging up from B7 to 10, 15, 20, and eventually B30. One important milestone that has happened in the latest 12th Malaysia Plan is the introduction of carbon tax. Although mechanisms have yet to be worked out, this is something that the MBA has strongly been advocating all along, that this is something that will help facilitate and justify the economics of biodiesel blending. These are some of my own projections of where Malaysian biodiesel industry production, export, and local blending will go. I believe 2021, we'll be lucky if we hit about 1 million tons. Maybe it could be slightly lower. And exports, I think, would be lower. It would be about 300,000. Last year was about 380. And our local consumption will be the balance of 700,000. This will gradually increase in 2022 to about 1.2 million tons of production, but I'm forecasting a lower export because of the issues that we are having in our single biggest export market, which is the EU. However, by 2025, we expect B20 to be completely rolled out, so also the industrial sector to move from B7 to B10, which might increase the total production by 1.5 million to 1.5 million tons, with local consumption increasing to 1.3. However, by 2030, the overall production is forecast to increase to about 2.5 million tons, again with local consumption increasing to 2.15. Here you will see I have forecast a slight increase in biodiesel exports by 2030. And my rationale is that although palm might not be in favor in the EU, there is, however, a lot of palm-based waste oils that will find its route, which it has already started to do, and that trend might increase. Therefore, our export quantities might increase as many Malaysian companies are deploying technologies to use waste oils and produce biodiesel. If you look at the economics, POGO has always been the benchmark for finding whether in the discretionary blending market, palm biodiesel is viable. And we have seen this trend over the years that whenever POGO is very high, discretionary blending market disappears. And we have to rely on POGO being favorable in order to see an increased biodiesel production. We are all familiar with this chart of the Indonesian Biodiesel Support Fund, and I'm sure this will be discussed in detail, which is based on an export levy, and we understand this whole mechanism. However, when you look at purely from a free market perspective, as CPO prices tend to increase, the volume that you can subsidize based on the levy structure in Indonesia automatically drops. And if you look at this chart, where you will see even in 2021, Indonesian biodiesel production consumption locally has been quite steady, anywhere between 250 to 300,000 kiloliters a month. However, depending on the POGO position, you will see that the monthly, the subsidy that is required to support the biodiesel industry is changing, and it is really a function of what that POGO figure is. I want to bring a new perspective to the discussion today, and that is to discuss the biodiesel program from a greenhouse gas saving perspective. These are the numbers that when Malaysia at B10 for transport and B7 for industry would avoid about 2.83 million tons of greenhouse gas emissions in CO2 equivalent, metric tons per year. Likewise, at B20 and B7, we might save 3.88 million tons. Now, one way of looking at the economics of the biodiesel is to look at its impact in terms of greenhouse gas avoidance. And that is why for many, many years, we have advocated the use of a carbon tax mechanism. And I have just put two different numbers for a metric ton of CO2 equivalent. What would it cost in terms of avoiding that by alternate means? If it is $50 a ton, or if it is $150 a ton, you will see that the B10 plus B7 alone could have a commercial impact of anywhere between 140 to 425 million US dollars. Likewise, when it increases to B20 and B7, it could be anywhere between 200 to 600 million US dollars. Now, these are significant numbers when you look at pricing biofuel as a part of a blend. I think carbon tax needs to be looked at, and these mechanisms will need to be deliberated, which will then justify how we can build this into our pricing formula. And this is a strategy that I believe the world will accept, particularly with COP26 guidelines coming out. The EU regulations, we all know the history of how the current EU RED2 has evolved in terms of various actions that the European Parliament has taken. But the key criteria that affects palm is basically the high ILUC risk criteria. The two cumulative conditions that they imposed in terms of how many hectares you increase annually, and if more than 10% of such expansion happens on land with high carbon stock. Now, these two specific conditions make palm the only oil crop that gets affected. So obviously, this is a concerted effort by the EU in sidelining palm. And we all know this roadmap that by December 2030, palm use in biodiesel, according to the EU RED2, is going to be phased out. Obviously, when you look at the projections, particularly going from 2024 to 2030, you will see that from as high as 6.2 million tons, it is going to drop to almost zero. So this is very significant from the biodiesel industry perspective, as what both Malaysia, Indonesia, and other palm biodiesel producing countries need to strategize. And another trend that you will see is while palm is dropping, you see an increased use of rapeseed. We don't know how it can be justified, a far more expensive oil being used for biofuel, and the use of course, waste oils like used cooking oil. The emerging trends we all know there is so much of media campaign against the use of palm for fuel. Not in my tank across many EU cities we have seen. And the latest is the call for green due diligence in Europe's supply chains, particularly linked to deforestation. Another emerging trend, I think one of the speakers alluded to this, is the increasing HVO production. And here I have mentioned about global HVO production nearly tripling to by 2025 as compared to 2017. But all of these HVO plants that exist today, as I have shown in this slide, or the planned ones, a number of them were dependent on CPO. Now, with CPO being taken out of the equation, we wonder where is the source of oil or feedstock going to come to feed these HVO plants or renewable diesel plants. Finally, ladies and gentlemen, in conclusion, what I see is COP26 has obviously pushed for decarbonization, which means an increased share of renewables. We have emerging trends that clearly show that the use of crop-based biofuels will be on the decline and waste-based raw materials will be on the increase, which means we need to gear up with technologies that can convert our waste into biofuels. And this will be a trend that we need to follow and make that economical. EU regulations will continue to tighten, which means our exports from Southeast Asia will continue to drop. Currently, the very high POGO spread you can see has put a brake on the ambitious blending targets that both Malaysia and Indonesia had. And if it continues to remain high, which it will dampen the spirit of the rate of acceleration at which we wanted to do biofuel mandate increase. I already mentioned about HVO being the next frontier. It clearly shows that the world is accepting renewable diesel for its impact on greenhouse gas emission reduction and the use of waste oils. We have all known the lower production. Many speakers before me have already spoken about it, how the COVID pandemic has affected CPO production and therefore increased price to an all-time high. We know that increase in local mandates is always a lever, a very strategic lever that both Malaysia, Indonesia, and other palm-producing countries have to support CPO prices. It depends on how judiciously we use this and how we can make it economically viable. And that's where the introduction of carbon tax can help us justify. And I hope our deliberations moving forward will be around the mechanisms of carbon tax so that we can really justify the use of biodiesel. I am not a price forecaster, but clearly you can see the world COVID restrictions are easing. People are moving about now to many countries. And as you have seen from earlier presentations, production will pick up. This means this very high prices of over 5,000 ringgit per ton might not be sustainable. Maybe it will dampen down to the levels of 3,500 to 4,000, depending on how much more output, so many variables into that equation. But if things come back to some semblance of normality, I expect prices to be closer to 4,000 ringgit a ton. On that note, ladies and gentlemen, I thank you very much for your attention and would be happy to take any questions that you might have. Thank you very much.
Thank you very much, Mr. UR Unitan, for your crucial insights on the biodiesel dynamics in Malaysia. Thank you once again. Up next, we are moving on to our fourth presenter of the day, which is Pak Togar Sitanggang, Deputy Chairman of Indonesian Palm Oil Association, or IPOA for short, on Indonesian biodiesel industry update. So good day, Pak Togar.
Good morning.
Good morning.
Thank you.
Sure, you can have the floor. Welcome.
Thank you very much. Good morning, everyone. Thank you for CPOPC, for CPOPC for inviting me to speak on this webinar. title that you presented to me is Biodiesel Industry Update. Again, I will start with the recent development on palm oil situation. We know that CPO price has hit highest in history recently, and we have heard from the previous speakers also. There's a production in Malaysia and Indonesia is not as good as expected. There are several reasons. It's already presented and explained, lack of fertilizer, etc., etc. Also in Indonesia at this moment, cooking oil price is very, very high. Of course, this one is as a translation from the high price of CPO and other vegetable oil market. So something that we cannot escape from. And recently, our president Joko Widodo said that export of CPO should be banned. We still do not have any detail on this, but in terms of Indonesia palm oil export, actually, we have seen the decreasing on percentage of CPO export compared to refined palm oil export. Since 2012, it was the 60-40, 60 for crude, 40 for refined, and up till today, I think the percentage is about 80-20 or even 85-15. And also, Indonesia will introduce carbon tax in 2022. But for us, the question is, what about the carbon incentive? Because just now, Unitan say that biodiesel usage, of course, Indonesia also is saving a lot of GSG. Whether or not this industry, the biodiesel industry, should have, the incentive for that, instead of only being taxed on the carbon. Just for the performance of 2021 up to 2021. AM and GAPKI is predicting that the production might be lower than last year. Again, the reason is already explained. And the biodiesel consumption also lower than last year. Basically, this one is due to the COVID-19 situation during June until August, where the restriction of movement so heavily throughout Indonesia, and the people movement is very limited. And the other interesting number that we can see from this grid is the export of crude palm oil, down by 60%. Again, this is my estimation up to September number. But to look at the trend on the 2021 compared to 2022, the CPO, the crude palm oil export is really lower, mostly about 50% than last year. But on the other side, on the refined palm oil, we have increased number by 22%. So in answer to that, our president demand for CPO export should be banned. We can see here we are gradually actually doing it, because the market structure and also the market demand and on and all. Our export demand, export figure for 2021 should be more or less than last year and maybe more. This is, again, the prediction for the whole year. And the final number, I think I will show it on the next week Indonesian Palm Oil Conference, December 1st and 2nd online. the production that I'm talking about, when it was October last month, my prediction on the production of CPO, the graphic is showing like this. Still hoping that the October number is still higher, and we have some sort of a mini peak in October. But later on, during my throughout November, I gather from the industry that the October number is still not picking up, and November maybe also still lower. And whether or not the December figure is going up is still a big question. So that's why the 46.5 million metric ton that I predicted is based on this graphic. So if December number later on this year again still lower, and we have further lower number on the production from Indonesia. However, the export, we know I think everybody know now, the August figure of export from Indonesia is actually based on the delay shipment on the June and July shipment. If you can see here, in June number is very low and picking up in July, and we know the reason. The players, the exporter, is delaying the shipment to July, August due to anticipating the lower number of export levy that was announced and starting with July 2nd this year. For the demand of our oil, we see one particular country here, destination is India, is lower about 24% than last year. So I guess this 24% is mainly, if you can, if you remember the first figure, is mainly on the CPO export. I think the India somehow prefer the refined palm oil rather than bringing crude of palm oil and process it there. So here the number looks the only I think this country that's significantly lower for our export destination is India. China and the rest of EU still, well, EU still lower, but it's not as bad as China, as bad as India. Sorry. And the price you heard and you watched the presentation by Thomas Milky, and this is what happened on the world vegetable oil prices. And this figure is actually coming from Thomas Milky Oil World magazine. And we see here there's a lot of still, potentially going up, and some potential going up if you look at the number. But again, also we are hearing also the production figure, the possible production figure for both Indonesia and palm oil situation with Malaysia, and the other oil like soybean and sunflower oil. Where is the production later on in 2022? Yes, it could be, it would be better production, but how about demand? Whether demand can, whether the production can really picking up with the demand. And for the biodiesel, the difference, so the spread, the POGO spread, especially for the biodiesel support blending in Indonesia, we are thankful that the gas oil price also going up, and so the palm oil price is also going up, farm price going up, gas oil going up. So the difference here, the POGO spread is slightly lower than for this November delivery, slightly lower than the last month. So This, I would say that if this spread is still there, continuing maintaining about 4,000, to 5,000 level, I guess we are okay on that. Biodiesel blending throughout 2021, I'm predicting it was high level of blending in October, and the possible blending also November could be there, and December is back to normal somehow, but we'll see again, because this government is already declaring for the Christmas and New Year's season festive. We are coming back to the level of restricting movement. So I may see this December figure should be lower because of the movement back to the restriction level. So it's only about half month of a normal movement on the 2021 December. The outlook for biodiesel, we see that the blending is 90% from the original allocation as per now that I can see, because again, I already mentioned the COVID-19 restriction movement during the June until August. The road test for B40 is planned to start in 2022, and of course that will be also raise the question when the B40 will be implemented. And also, coupled with that, the Gaikindo, the automaker association in Indonesia, requested that if we are going to use B40 full from FAME, then they are asking about 200 ppm water content. Now the level is about 350. Reducing 350 to 200 would need additional investment, and we'll see how this discussion will go in 2022. So it will answer the question of whether when is B40 will be implemented. So if these two combine, and if the B40 road test in 2022 successfully running with the water content 350 ppm, then it is very possible in 2023 we will see the B40 implemented. But if the B40 here need to have 10% or less using the HVO products, the green diesel or second generation of biodiesel, then we might see this B40 delay a bit, maybe 2024 or maybe 2025, because we need to have someone somewhere somehow to invest the HVO plan in Indonesia to have to meet the requirement requested, and based on the road test that the B30 would be maximum for FAME, and the additional B blending above 30% should come from second generation. If that happens, if that is the result of this road test, then I would see this B40 would be delayed further than 2023 or maybe 2024, depending who would be investing on this plan. The biodiesel plan, the FAME, yes, there is still investment still going on. We saw two new plan getting allocation last September, and at least one more plan if they can manage to complete the whole building of the plan, they should get, and also getting the allocation for the 2022. But this is something that we need to see further, because the allocation for the 2023 for biodiesel should be announced by mid-December this year. Let's look at a bit on the economic outlook by IMF, World Economic Outlook. This is by IMF, reported October 2021. IMF and other world financial institutions predicting that the 2021 should be the recovery year for the whole world, because 2020, the whole world economic situation is going very, very bad, and due to the COVID-19 pandemic, and should be recovered in 2021, and then going further in 2022. If we can see back into the whole world vegetable oil complex, the demand is coming back, from every sector and everywhere, because the economy is getting better. China, India is a strong importer of palm oil from Indonesia. Also, will continuing showing the demand coming from these two countries. For EU, even the economy is getting better. We have that problem with the delegated act and etc. On preventing or limiting the uses of biodiesel, that palm-based biodiesel. So even though the economic in EU is better, but the export to EU might start see a slow number going to EU. But again, it was a very interesting, then which I also been thinking on the same line with you, Unitan, that if there is no palm oil on the blending in EU, where the EU will get the blending? Is it rapeseed, or is it sunflower, olive oil, or what have you? And whether the production of this vegetable oil will be enough, to meet their requirement on the blending of biodiesel. This is the dynamic of biodiesel in EU, but the dynamic of vegetable oil in the world is really, really something interesting to see for the years to come. Indonesia outlook as in general, we know, and we've been hearing at least two presentations today. Indonesia, the growth from Indonesia is not as strong as previous years. Well, we know all the reason: the lack of new planting area, lack of replanting, blah blah blah, lack of fertilizer, and everything. So I think we all agree that the growth for Indonesia production will not be as strong, and maybe will reach the growth will reach its plateau by 2025. So this is something that we need to really consider. The levy revision may not be it in short term. The fund is enough. It's quite well. I am predicting until first half of 2022 should be enough. Should be okay, unless the palm oil and pogo spread is so huge, which I doubt it would happen in the next 6 months. Like I say, the cooking oil price is very high, and I think Indonesia need to really accepting this, because this high price, even if you are hearing before Thomas Mielke say that the price will go down in 2022. Yeah, but I think it's still on the high side, So the cooking oil price in Indonesia would still be on the high side, and the effect of these commodity prices, it's not just vegetable oil. but including crude oil and in all commodities or prices. I think most of the commodity prices are on the high side. The inflation rate will be high in all countries, including Indonesia. And I think that is my presentation. I don't give, I'm sorry to say that I don't give my outlook today because I'll be giving the final outlook for 2022 next week in the Indonesian Palm Oil Conference, which I'll be speaking also on the Indonesia demand, palm oil demand. And there for next week, I will give you more detail. Please join the conference. I'll give you more detail on the how situation in Indonesia and what is the outlook on the Indonesia and palm oil production in 2022 and prices, of course. Thank you very much.
Thank you very much, Pak Togar, for your update on the biodiesel industry in Indonesia. And I'm very, very sure our audiences here have learned a lot from your presentation. So thank you once again, Bapak.
Thank you.
Sure. So moving on, next we have Dr. Julian McGill, Head of Southeast Asia of LMC International Limited. Dr. McGill is going to present his paper on Will Palm Oil Demand Respond to High Prices, the Outlook for 2022. Welcome, Dr. McGill. Welcome to OCOPOP.
Thank you very much. It's good to be here. I shall share my screen now. I shall hope you can all see this. So yes, thank you very much for the opportunity to speak here today. And thank you to all the listeners who've, I know, had a lot of slides thrown at them, but thanks for hanging around. And hopefully you'll have a very good debate at the end. I'm going to start with a similar point to one that we've heard now quite a few times, and that is, yes, palm oil output has been disappointing. I'm trying to show this to you in a slightly different way, though. What I've done here is, on the diagram on the left, I'm showing you the yield annualized in the first half of the year for Malaysia and Indonesia, and on the right in the second half of the year. So this is the yield up from January until June, and this is from June until the end of the year. And there's a couple of points here. One of those that you can see immediately is that Indonesian first half yields were remarkable, while Malaysian were rather pathetic, to the point where, in fact, Malaysian and Indonesian yields, due to a steady decline in Malaysian yields and relatively flat with a good increase in 2021, Indonesian yields almost reached the same amount in the first half of the year. Second half of the year, however, saw this quite surprising decline in Indonesian production, and that, accompanied by a decline in Malaysian production, led to a very unusual first half, second half split. It's almost, in our numbers, equal between the first half and second half in Indonesia, which is very unusual, and of course left a lot of buyers scrambling towards the end of the year when the availability that people had forecast simply wasn't there. And of course, with the export taxes, there were a lot of big buyers happy to buy CPO for processing. So we know a lot of people in Indonesia had difficulties with that. Now, the reason for the Malaysian decline, of course, is related to, as we have discussed, the issues with the workers. I share the first speaker, Ms. Lau's concern that the new arrival of workers won't solve these problems overnight. Firstly, how many workers will arrive? Where will they come from? Will they be trained already? A large number are coming from Bangladesh. We're already hearing stories of entire trees being killed as overeager harvesters with no experience come and cut down the crown of the tree. The other issue is the net impact. How many people are leaving? As workers become vaccinated, they are leaving Malaysia as quickly as they can to return home. And who can blame them after 2 years away from Indonesia with extra cash in their pockets? So overall, it is unlikely that the problems in Malaysia will be solved immediately, but it is a step in the right direction, of course. Now, another point here, someone mentioned, Dennis, I think, asked a very good question about age profiles. Another point that isn't discussed often enough is looking at the relative regions in Malaysia. So Malaysia, during the peak this year, managed to harvest 1.7 million tons a month. And that was to a great extent due to the hard work of the companies that really found every single worker they could and put them onto harvesting duties, including in some occasions their rubber tappers were taken into harvesting. Nonetheless, that's still the second worst yield. That's equivalent to the yield after the 2015 El Nino. So we did have a very low peak. But the point that is really important is, while Peninsular Malaysia, this was a one-off. If you look at Sabah and Sarawak, you'll see that Sabahan and Sarawakian yields have actually been declining, and the peak crop has been declining for 3 or 4 years now. And that, to me, is the big question about Malaysian yields, is what will happen in Sabah and Sarawak, and what is causing this decline? They have the best age profile, by the way, much better than Peninsular Malaysia. But all of the problems that the first speaker mentioned come into this. Ganoderma, problems with the culture in the companies, problems with management. All of these are, I think, an underestimated concern. But in the short run, the impact, of course, is good. We have had very high prices, due in part thanks to this very, very slow growth. And we shouldn't only look at Indonesia and Malaysia. So I've plotted here Guatemala, Colombia, Honduras, and Thailand. So Thailand is about 3 million tons, Guatemala, Colombia, Honduras about another 3 million tons altogether, half of which is from Colombia. So relatively small, but at times quite large exporters. And of course, a number of these countries are also sitting in CPOPC and potentially joining. The picture there is similar in that you saw a decline, as you can see here. This is year-on-year change in CPO output, and you can see here in 2020 quite strong declines, all due to the droughts in 2019, due to lower fertilizer, all of the usual issues. Honduras here is particularly bad because there were very, very bad floods. Colombia was also hit by bud rot in the north. But since then, we've had, as in Indonesia, as in Malaysia, 24 months of really rather good rainfall. And we can see that now in the year-on-year growth. The reason we're using year-on-year, of course, is to get away from any seasonality. So you can see this is the trends in here. Again, you can also notice the very large swings in Thailand, which of course is due to the relatively limited rainfall in southern Thailand. But all of them are currently in an upswing. So you had lower fertilizer, you had floods in Honduras, you had bud rot in Colombia, but today we're seeing an upswing. And that's important because all of these countries are important exporters, increasingly so. Thailand in particular had its largest exports in history this year, and that was in part due to lower biodiesel usage. The government reduced the mandate, but also much lower palm oil food usage due to the decline in the tourism industry. All of these are seeing record growth. They're likely to see record exports in 2022. In the case of the Latin Americans, of course, that will be going mostly to the EU, which will further decouple EU prices from Southeast Asian prices. In the case of Thailand, we'll be looking towards those exports going to India to supply the CPO to India. Now, one question in the background to all of this is, with these current very, very high prices, are we not going to see a decline in food use of vegetables? Can people still afford to pay? Pak Togar was mentioning the very high palm oil prices. In the past, we've always been worried about this, about very high prices leading to demand destruction. However, what we've seen since the outbreak of COVID-19 is that food use of vegetable oils is actually remarkably inflexible. And to make this point, what I've plotted here are exports from Indonesia and Malaysia to Africa. These are the monthly exports alongside the year-on-year change in exports. You see, we like year-on-year change because, again, it takes out the seasonality. The point here is that despite the very high recent prices, exports to Africa, which must be viewed as a very price-sensitive market, a very impoverished market, have been increasing. It seems that the evidence suggests that despite high prices, willing buyers remain. And I would argue that food demand is actually relatively inflexible. And we saw this during the lockdowns when food demand actually only declined very modestly for, say, 3 months during the main lockdowns and then rebounded very, very quickly. The market where all this matters is India, as the biggest importer and also an incredibly price-sensitive market. But India, of course, is complicated by the import duties, which have recently been changed quite dramatically. Again, the Indian government is worried about high prices. And what we're seeing is an improvement in terms of the relative price of palm oil, as well as relaxation of restrictions on palm oil. So you should see more palm oil coming in, which is making life, incidentally, very difficult for local refiners. Today, their palm oil price is only about $50 above the CPO price, which, given the lower price for PFAD, given all the rest, is not enough to give them a good refining margin. Sunflower oil is also coming down due to the excellent crops in the Black Sea. As those are crushed, we should see more and more sunflower coming in. And we're also seeing more availability of very good local oil crop in India. So that's rapeseed as well as mustard seed. Local rapeseed oil prices remain very firm because they haven't reduced the import duties on rapeseed oil to protect local farmers, and of course as well because of the calamitous harvest in Canada, where the crop has been decimated. Really, it's declined dramatically. Not only has the crop declined, but the oil content has declined due to these droughts. So we've got not much flexibility on the food use. However, all of the competing crops, the crops that compete with palm oil, really only compete with palm oil once they're crushed. And that's a really important point to remember. A lot of people talk about the harvest on the soybean, the harvest for this, harvest for that. None of it matters from a palm oil point of view until the point at which they are crushed. And what the diagram in front of you right now is showing you is year-on-year change in soybean crushing. And the general point it's trying to make, and I know it's a little bit messy, but if you look at 2021, with the exception of Argentina, and Argentina really was coming after a year of incredibly low crushing in 2020, 2021 has actually seen very low levels of crushing. So even though we're receiving these very large supplies from the US, and the initial indications from Latin America are very, very good for planting, actual crushing has been pretty weak. And that has meant you haven't had the volumes of soybean oil coming onto the market. What's caused these weak crushings? Well, at one point, I think we need to think about, and I'll come back to in later slides, is despite all the talk around the massive investments in HVO in the US, the ramping up of US biodiesel demand, actually on the ground in terms of crushing volumes, we haven't seen it yet. We're starting to see an increase as the new crop comes in. And we're also starting to see an increase in China. Chinese, as you can see here, Chinese crush volumes went very, very low. Few reasons for that. One is the pork price had collapsed. The herd has been, it appears, mostly rebuilt. Well, funnily enough, the herd after ASF is still smaller, but the average pig size is bigger. They had problems with electricity for the crushing plants, bringing down the volumes, very low margins. You don't see it here because this is monthly, so the latest month isn't in here yet, but the latest evidence is that the crush in China has recovered in November, partly due to higher pork prices. People are pickling meat ready for the winter, and partly just due to recovery in the electricity, in the energy, and in the crushing. So we're seeing the first indications of growth in the crush there. Argentina, we still have very big problems with Argentinian farmers unwilling to sell their crop because of very high inflation, because of concern getting pesos. You still have problems with the delivery system, with the low water levels. But we're not likely to see that much soybean oil coming from Argentina, but we are seeing it from the US now a little bit, and from China. And of course, that will, in China's case, stop palm oil imports or weaken palm oil imports, at least until the end of the winter period. Palm oil's not so competitive into China anyway. Now, I mentioned biodiesel, and this really is critically important. There's a lot of talk at the moment about biodiesel in the US, about HVO, with good reason. Our fastest growing department at the moment is our biodiesel team. We have huge numbers of inquiries on people building new HVO plants, investing in renewable diesel, all of the rest. And the reason for that is in part revealed here. These are the renewable identification numbers, they're called RINs, their value since 2018. And what you can see had happened is with the election of President Biden, the RIN value, which are generated every time you blend your biodiesel. And it's a bit complicated because you generate different numbers of RINs. So biodiesel is 1.5, HVO is 1.7. But broadly speaking, essentially, this is the value you're getting per gallon times a multiplier each time you blend. And you can see it went from, say, 60 cents to $2 at its height. So far more than doubling, more than threefold increase. And of course, that increased the value of biodiesel dramatically. It increased the value of HVO dramatically and led to this bonanza, along with general concerns over sustainability and decarbonization and all these other things that are up in the air. This led to a bonanza of investment. Since then, however, we have seen RIN values juttering downwards. Now, I would argue that this really is a sign of the barometer of concern over what President Biden is going to do. This period here, this was the increase due to the election of President Biden. Since then, there's a lot of uncertainty. The RFS mandate hasn't been approved for this year, not next year, this year. We don't have an approved RFS mandate for this year yet. And as you're aware, there's not much time left in this year. So what will he do? Will he approve the mandate at a higher rate than the current usage, or a lower rate, or exactly where it is currently? I suspect a lower is unusual, but how much higher, or exactly where it is today? And what will that do to RIN values? You can take these over. 20% of your RINs can be taken over to the next year. There's concern that the smaller petroleum refineries are putting pressure on him. There's concern about his plummeting approval ratings and the high price of what they call gas, of petrol in the US, and diesel. All of this is leading to some concern over what's going to happen with the RFS, and some worries that it might very well be less of an increase than perhaps the heady earlier days with the first election of President Biden people anticipated. Outside of the RFS, though, we also have to look at the Californian mandate, the so-called LCFS, the Low Carbon Fuel Standard in California, and that is on far more secure footing. Here, these are our in-house forecasts. It's based on what we think the policy is going to happen. There are many such forecasts, but they don't vary too much, of what the demand for LCFS biodiesel, so including both renewable diesel and FAME, could be going out to 2030. And you can see it's quite a large increase from under 3 million in 2020 all the way up to over 6 million by 2030. And as you can see, the blend will be at that point above 45%, which of course means that you'll be relying to a very large extent on renewable diesel, which is the gray area here. As you can see, the FAME, the normal diesel, is capped off here because of the blend wall, which is very low in the US. I don't know how people know this. It's only you in Indonesia are talking about B40. They have a B5 blend wall, so very, very low blend wall indeed. So Californian mandate is growing. Another aspect to it that's very important is the blue line here, the blue area, jet fuel, sustainable aviation fuel. That's a big part of our work now, is looking at sustainable aviation fuel. It's potentially very important. It's potentially very good for the environment. It's very difficult to electrify planes. All of these other things are leading. A lot of the capacity for HVO is actually for HVO for aviation fuel, not for cars. Now, in the background to this, of course, the EU's policy is also shifting, and it's shifting a bit more towards what California does, towards a GHG-based policy, so one that focuses on greenhouse gas savings rather than the kind of crude system that's been used so far of having different multipliers. That will mean the EU will still support waste, although it looks like the current policy decisions don't necessarily support waste much more. It depends on what the GHG values are, but they're likely to use the ones they've already been using up till now. It also crucially supports biodiesel, FAME, quite strongly, because there's a proposal to increase the blend wall to B10, which would allow the EU to improve its volumes quite dramatically without actually resorting to HVO. Although HVO, of course, will also come. There's also issues to do with electric vehicles that will favor electric vehicles much more strongly. Now, both of these policies, of course, are chasing the same low GHG waste feedstocks. And sitting in Asia, you may say, well, they don't take our palm, why should we care? Of course, they do take palm-based waste, at least the EU does, POME and the like. How much longer that will continue for, I think people have figured out the P in POME stands for palm, and there's some pressure now. Certain member states are starting to reject it, even though actually the European Commission, by law, has said it's acceptable. But either way, I would argue all of this is good for the wider oilseeds complex. There is a limit to waste. By definition, you cannot generate waste deliberately. It must come as a byproduct. And therefore, as all of the waste is taken into biodiesel, as more and more biodiesel uses waste, other oils have to come in and fill that. The obvious example in the US is the increased use of tallow in biodiesel as well as HVO, which in effect will lead to higher use of palm oil for stearic acid. There's no alternative. But tallow won't disappear fully. Tallow has some advantages as an oleochemical feedstock, so it will remain. But all of the tallow that is going into other uses for biodiesel, well, it has to be replaced with something. Palm is the obvious solution. So all of this actually is broadly positive for the broader vegetable oil complex. So 1 minute left. What does all of this mean? What are the conclusions here as well, leading into our debate? Well, I think the first point is that, as every speaker has said, the slowdown in palm oil output is clearly apparent. The question is now around the recovery. The phased arrival of new workers in Malaysia starts to solve the problems. It doesn't solve them. And there are many problems on the plantations. I don't have the time to go into all of them. Perhaps we can discuss this. Indonesia had this incredible growth at the start of last year. That probably suggests that the start of 2022 will not have the same growth. We're talking 20% year-on-year growth at the start of 2021. We're unlikely to see that again. So that means palm oil output is relatively limited, at least for the next 6 months. Next year, perhaps we'll have a better peak. We have had 24 months now of very good rainfall. A little bit too much in Kalimantan from the La Nina, but that's really only a short-term disruption in my view. US soybean harvest is ample. Latin American planting is progressing well, but the key to look at is crushing. US and Chinese are picking up. Keep a close eye on that. It's still early days. Now, our evidence suggests that the high prices on food use of vegetable has a surprisingly limited impact. In India, with the change in the import duties, substitution towards sunflower oil, very good rape and mustard seed oil crops will reduce the need for palm oil in the short term. Also, you have to look at the structure of the current import duties for local refiners. Their margins are very, very poor, and they're having a lot of competition from imported olein, even from neighboring countries. Food use is relatively inflexible, but biodiesel demand can be mercurial, that's changeable. The RIN prices that I showed you chart the political barometer around the RFS. There's question marks there. We keep talking about how this will bring a lot of demand for soybean oil. It hasn't done so far. The low crush in the US shows you that. California and EU increasingly are on waste, but that will indirectly support palm oil as well as the broader vegetable oil complex. Our view is, as I think shared by everyone, that prices will soften slightly over the next 6 months, mostly due to weaker biofuel demand, due to this US issue. That's really the driver here, but not dramatically. Biofuels is where the question marks remain, but the single greatest thing that any country has done is the Indonesian export tax system, which will insulate Indonesia from this volatility. They have the advantage to be able to tweak their export duties. And more broadly, more fundamentally, the position of the oil palm is very strong, but the big question is over yields. We need to see those yields improve to defray higher labor costs and keep revenue increasing. Thank you very much for your kind attention.
Yes, thank you very much, Dr. Miguel, for your interesting presentation. And we've definitely learned a lot today from your delivery. So thank you once again. Now on to our last speaker for the day, but certainly not the least. Yeah, certainly not the least. We welcome Dr. Muhammad Fadil Hassan, Director of Corporate Affairs of Asian Agri Group, Asian Agri Group, sorry. So Pak Fadil will talk on export levy and behavior of CPO prices. Good day, Pak Fadil.
Thank you very much.
You're welcome.
Rinka. First of all, thank you very much also for inviting me in this seminar. My presentation would be more specifics, looking into the export levy and the behavior of palm oil prices. So let me start by showing you the slide on how the importance of Indonesian biofuel program. As you know, that Indonesian contribution in vegetable oil wood export is almost 30%. So therefore, any change in export due to domestic production increases or consumption increases will affect world vegetable oil market. Yeah. And if we look at the Indonesian palm oil balance, we can see here that the share of export are around 70% of the production, while the domestic biofuel consumption are 50% of the total domestic consumptions. So any disturbance on the biofuel program in Indonesia will affect Indonesian export, and for that matter also affect the vegetable oil market. Now, if we look at the graph on export levy and then price of CPO, as we can see here from the slide, it seems like we cannot conclude clearly pattern of the relationship between the export levy and then price of CPO. It appears that in the beginning of the biofuel program in Indonesia in 2015, impact of the imposition of the export levy was quite significant in increasing the price of CPO. However, in the following year, with the change in export levy in response to the change in palm oil markets, we can see here that were not very clear. Yeah? So the reason for this is that the change in PE carried out for various considerations, not only related to the price concern, but also any other factors such as the availability of the CPO fund and any other factors. So,
Pak Fadil, sorry.
Yes.
If I can interrupt a little bit, are you able to enlarge your screen to make it into a full screen?
Oh, okay.
Presentation. Yes. Sorry to interrupt, sir.
Okay. Here we go.
Very good. Thank you so much.
We examine how we examine the impact of the change in export levy on price CPO. So first of all, we do time series analysis on price CPO, FOB, KPB, and CI Rotterdam, and then we introduce the change in export levy reflected in the what I call it, this ministerial finance ministerial decree as an interruption or a shock to these prices, and then we identifying the interruption of and its impact, and then we coincident this with the change in the PMK or the ministerial decree or change in the export levy itself, you know. So this is the result of the model that we run using the ARIMA, auto-regressive integrated moving average, and we can see here that the change in the price for the time T+1 actually determined by dynamic of the overall variables in the global markets, reflected in the residual in the time T, you know. So and I can see here that this model is very quite robust, you know, and so we see that this is proper or appropriate model to see this trend in the price of CPO both in CI Rotterdam and in the FOB KPB. Now, then we try to see the change in the various export levy in the period of 2015 up to to 2021. Yeah. As you know, during that period, export levy was changed due to the various reasons. And then this change in export levy motivated by global market condition, supply, demand, and prices. Then that affect in turn in the fund collected by CPO agency, or we call it BPDPKS. However, change in the global market of palm oil in around or before and after the change itself is announced, caused by the mixed factors such as the planned change in the PA and variables in the global palm oil markets that cause change in PA. So we see here that there are interaction between the plans of the change in the export levy that create actually I would say speculation in the market, and then market reacted to it, and then when the change in pay is announced, that also responded by the market. Now, the change in the price credited to the change in PA and dynamic change in overall variables in global market condition. That's what happened, I think, in the price of the CPO, and then both in the CIF Rotterdam and the FOB KPB. Yeah. So that's what happened so far that we analyze it. Now, to see more detail on this, we can see here, for example, impact of change in PA on CIF Rotterdam in various occasions. For example, when first export levy was introduced in August 2015, price of CPO changed its trend. You know, here in the on the top of this, you know. So if there is no PA or export levy introduced in August 2015, we saw here that the trend of price of CPO is down, is declining. But then when the price, when the PA is introduced, then we can see the change in the trend of the price of CPO. So increase quite significant, and then this impact is more or less permanent than is temporary. Now, also we can see here the impact of change in PA on CIF Rotterdam in November 2019, and what we can see here is that the impact of the November 2019 caused the short-term impact of the prices, but then back to the previous trend, as you can see here in this graph. And then change in PA in June 2021 also have similar impact as in November 2019, in which the trend, the impact is change its trend, yeah, to increase, and then what they call it, a little bit, but then we don't know up to now what is in the future, you know. So we cannot conclude firmly whether this is going to be permanent or going to be temporary, because the time series is not yet long enough to capture this. Next, we can see also how the impact of the change in PA to the price of CPO in FOB KPB or domestic CPO prices. Yeah, and we can see here also that a bit different. For example, in terms of the time, but also there is a similarity with the impact of the change in PA in CIF Rotterdam. In November 2019, as we can see here, that the impact rather short term, but then back to the previous trend. And in May 2020, it changed the direction with the increasing trend. And then in the June 2021, more or less, there is no significant change of the change in PA to the price of CPO FOB KPB. Now, in addition to that, we also analyzes the impact of the change in PA on the Indonesian export, both CPO and then downstream products, both volume and also market share. We in the previous slide, we already see how the change in PA affects the price of CPO, CIF Rotterdam and KPB, FOB KPB. But now we would like to analyze the impact of PA on the volume and then the market share of the Indonesian export, CPO and downstream product. As we can see here that in the dummy variable before and after PA, we see the imposition of the PA has a negative impact on the volume and then the market share of the Indonesian export, but of CPO. But for the downstream products, the impact of the PA has a positive relation with the the volume and then the market share of the Indonesian downstream product. In this slide, we do the other way around. Yeah. So instead of analyzing the impact of the PA to the volume and then the net market share of Indonesian export, we analyze the impact of the biofuel program on price of CPO, meaning that if we increase the volume of biofuel program in Indonesia, how this will affect the price of a CPO. Now, as you can see here also that the with the increase of biofuel program in Indonesia, it has positive impact to the price of a CPO, yeah, domestic price of CPO. So it seems that there are two conflicting, results from our exercises. Yeah. First, as I mentioned before, PA has negative, or export levy has negative impact on volume and net market share of Indonesian exports, which also can be interpreted that it caused the declining of the Indonesian competitiveness in the global market. Yeah. So in this regard, as if this biofuel program does more bad than good for Indonesian palm oil industry. But we also see from the previous slide, there is a positive impact of an increase in the domestic consumption or biofuel program on price of CPO, as shown by study that we did earlier, yeah. And similar result obtained from the previous study by Johnny et al. In 2011, where an increase in the volume of domestic biofuel program correlated positively with an increase in the domestic price of FFB and CPO. So what I would like to say here is that overall impact of biofuel program, in particular domestic consumption increase, and also change in export levy, can be positive or negative on on the market, Indonesian palm oil market, depends on which variable is stronger in affecting price of CPO. Now, so in conclusion, is that first, BPDPKS or CPO funding agency has an important and strategic roles in vegetable oil market, since its policy affects both vegetable oil production, consumption, and export. Yeah. And then dynamic of palm oil prices is difficult to predict, as it's influenced by a complex variable for both fundamental and non-fundamental market. However, short-term change in price of CPO determined by the trend in the previous month, and also market speculation in around or before and after change in pay itself announced. Yeah. And then change in pay when price of CPO are low, will affects an increase in price of CPO, and then change in export levy influence global vegetable market. This is already I think shown in shock in August 2015, which caused a change in the trend of price CPO. So there's a shock in February 2019, while in a shock into November 2019 and June 2021 only give a short-term change in the trend of the price of CPO. Another conclusion is that export levy has negative impact on the export of CPO of both volume and market share, but has positive impact on export of downstream products, both volume also a market share. And in another conclusion that we can take from that is that an increase in domestic CPO consumption biofuel program has positive impact on price of CPO. So I think as a general conclusion from what our analysis is that the need to maintain a biofuel program as an instrument for stabilizing world vegetable oil market. Yeah. However, we can see here that change in policy has to be predicted, yeah, and flexible enough, so it does not create speculation in the market. So that's why I think with this we what we call it the BPDPKS should have what we call it this export levy scheme, yeah, that predicted, yeah, by the stakeholders and flexible enough so that in the future we don't change oftentimes the scheme of the export levy as we had before in the during the period of 2015 to 2021, where the change in export levy scheme was done around eight times now. So I think again this study show how important is that a biofuel program conducted by BPDPKS for the stabilizing vegetable oil market globally, but also I think in the domestic Indonesian domestic market. I think that's all that I can present, and then yeah, I'm happy to entertain the question. Thank you very much.
Thank you very much, Pak Fadil, for your valuable presentation on export levies and CPO prices behavior. I understand that this is the first time it being presented at any seminar. And so this would certainly raise many questions and clarifications from the participants. So thank you so much once again for that.
Yeah.
Yeah. Okay, sure. So now this is the moment that we have all been waiting for. Thank you, participants, for still being here. Let us now move on to our panel discussion on formulating strategies for sustainable supply and demand and remunerative prices of palm oil. So this panel discussion will be moderated by CPOPC's Executive Director, Tan Sri Dato Dr. Yusuf Basiron. Hello, Tan Sri. So before I give the floor to Tan Sri, I would like to inform that participants, you can still ask questions through the question box, and we will try to accommodate all your questions and input accordingly. So now, without further ado, if I may kindly invite Tan Sri to begin the panel discussion. The floor is all yours, Tan Sri. Thank you very much.
Thank you, Dinka. Welcome to the panel discussion session in today's webinar. The theme of this panel discussion is formulating strategies for sustainable supply and demand and remunerative prices for palm oil. Being from CPOPC or Council of Palm Oil Producing Countries, this is a topic and a platform for which stakeholders, mainly the producers of palm oil, can talk or discuss about the sustaining of good supply and demand balance for palm oil and other vegetable oils in the marketplace, which may lead to them continuing to enjoy relatively good, sustainable or remunerative prices for palm oil that they have experienced for first time in the last 2 years. So that being the objective of the panel discussion, I'd like to get the panelists prepared before I announce the panelists. I think they should be prepared with 3 or 4 issues of strategic issues that they feel the producers must pay attention to in order to either of one of these 2 things. One is to make sure supply is healthily rationalized, in the sense that you can get more revenue if you are able to increase your supply of productivity, yield, while the prices are going well. That is one way to benefit the producers, the smallholders. The second is to really look at the other side of the equation, how demand destruction with all the challenges could lead to demand destruction, which is bad for prices, and therefore we must look out for such challenges, and what strategies can the producers take to mitigate all those negative challenges that may affect the prices of palm oil to be lower in the future. So, but the rest, I think we have heard a lot about all the factors and issues relating to the palm oil supply, demand, and price projection and prospects for 2022. So the arrangement is that we have the distinguished presenters still volunteering to sit as panelists. Ms. Liao, Mr. Unitan, Mr. Togar, Dr. Julian, Dr. Muhammad Fadil are still with us. They continue to be available as panelists, and they will therefore respond with their short additional intervention later based on 3 or 4 major issues that they can highlight to us that may become strategic issues that we as producers may want to consider paying attention to in the next few months. The next tweet would be that we have also invited 2 additional industry-based experts or panelists, distinguished personalities in the industry. One is Mr. Haris Arshad from Samdabi Oils, Malaysia, and the other is Mr. Bernard Lim from First Resources, Indonesia. Now, both of them are not speakers, they are panelists, but we encourage them to say a 5 to 10 minutes presentation of their choice to undertake to cover the subjects appropriately based either on the theme of the conference, which is Outlook for Challenges and Opportunities, or the theme of the panel discussion itself, formulating strategies for sustainable supply, demand, and remunerative process of palm oil. And after they have presented, we will, both Mr. Harris and Bernard Lim have presented. We will ask the other speakers or panelists to offer short interventions with their statements to cover the theme if they have. And then we will open the discussion to the participants, especially if they have already registered their questions to the speakers earlier. All these questions will be simultaneously selected and addressed or answered by the panelists as we go along. As in addition to any new questions that may be offered during the panel discussion in response to the panel discussion issues being discussed, those questions or even comments are welcome. We will record them all, and if we cannot address them today during the panel discussion, we'll certainly take note of the good ideas suggested or question asked, and we'll try to keep this what we call panel discussion kind of having a long life, because we are recording and putting a lot of this discussion and the presentation on YouTube, for example, for our record, which can be referred to by all in these coming days for their own leisurely time to digest all the information that we present today. So with that, may I now invite Mr. Haris Arshad of Samdabi Oil to make his presentation, short presentation as promised. Thank you very much. The floor is yours, Mr. Haris.
Thank you, Tan Sri. Thank you for inviting me here, and it's a real pleasure to be with you again, although virtually. I will take about 5 minutes perhaps to talk about sort of our view as Samdabi Plantation with regards to supply of palm oil, prices, and perhaps where we see the next journey in terms of sustainability is heading. Perhaps we answer the question of price first. Our view is that what we are seeing today is the combination of all the factors that has been brewing. So it's almost a case of a perfect storm. And we've heard previous speakers talking about how supply is not growing, And therefore, as you know very well, oil palm is a long tail business. That what you don't do 5 years ago has an impact today. And we're also seeing issues now pertaining to energy crisis, in particular the lack of fertilizer application, labor issues, and so on, which potentially can have an effect further down the road for our industry. And therefore, the question is, what should be the new flow for palm oil? It's quite easy for us to forget that not so long ago, we even had 1,800 ringgit as the price of palm oil. Is it reasonable now to expect prices to go down? I do believe that prices today are not sustainable. It is actually very high. So you may see prices coming off, as what fellow speakers have said earlier. But how much of a decline will we see next year? This is a matter of debate. I, for one, do not subscribe that you will see a crash in the market, but certainly you ought to see prices coming off, but still at a higher level than we were, say, 2 or 3 years ago. So that's on sort of price direction, and therefore it will be fairly profitable still for the oil palm producer. The next topic is around how do we ensure that the sustainability of oil palm continues. And here I'd like to say that we have to look at oil palm consumption in 2 parts. One is food consumption, and the other one is a non-food consumption. There are a few things which are common, but there are others which are not. So those which are not common in oil palm, in food consumption, pardon me, will revolve around food safety, in that there's an increasing demand for low ME, low GE. Europe in particular is now starting to mandate that, but there's an increasing discussion around mineral oil contamination, the so-called MOSH/MOA debate. These are emerging, no doubt, but I do see this as becoming mainstream, just as GE and ME are mainstream today. So in the context of sustainable supply, how do we ensure that we address the question of food safety? Now that's perhaps unique to the food side. But onto the non-food side, this is not really relevant for them. We run biodiesel plant ourselves, and we don't care about ME or GE or MOSH/MOA. But if you look at these 2 issues, you realize that this is actually quite complementary. So what do I mean by that? By addressing food safety concerns for your food side of the business, you will generate feedstock supply that can address the demand for your non-food side. And you can address that by addressing how your meal is being constructed so that you're able to separate the so-called non-food grade oil, and that will go into biodiesel or non-food use. And then what you are left with, arguably, will be high quality palm oil that can be used for food sector. You heard about how the demand for waste oil is increasing. There is a play there if producers are able to reconfigure how their meal is structured. But then there are other common things which we probably need to continue to be aware of, and that is around the issue of traceability. Why is the need for traceability? We have now moved beyond certification. No longer are we talking about, are your oils certified? Rather, we're now moving beyond that, and we're not talking about, do we know where the oil that we produce come from? And this is important not just for the food manufacturer, but also to the non-food user. If you look at the energy sector, they are talking about reduction in greenhouse gas intensity in their supply chain, so the so-called decarbonization of their industry. So that will require the feedstock to have a low carbon footprint, and hence, where can we have a play in there? And I do believe if you address the issue of sustainability holistically, what comes out for the non-food sector will also address the low carbon footprint requirement. Issue around no deforestation, no exploitation, labor treatment, and of course speed applies to both food as well as non-food. So being able to address all of this at the same time, understanding the distinction between food and non-food requirements would allow for oil palm producer to further valorize what is one thought to be waste, and therefore you have a more holistic, almost a circular-like system or ecosystem for the oil palm industry. So I'll leave it at that, Tan Sri. Thank you very much.
Thank you, Mr. Haris. Also, to move on with to invite Mr. Bernard Lim for his short presentation before we move on to opening more intervention by the other speakers. Please, Mr. Bernard, floor is yours.
Thank you, Tan Sri. Good afternoon to all the distinguished guest speakers rather, and also thanks to CPOPC for the invitation to be the panelists. And good afternoon, all ladies and gentlemen. Extending what Mr. Harris has basically elaborated, I think one of the strategies Indonesia has adopted since 2015 with a lot of moderation or modification to the biodiesel scheme, you know, the B20 all the way to B30, and coming up with this export duty framework or export levy framework to self-fund itself, which is pretty much attaining certain level of success, I would say. So going forward, you know, whether there's a lot of talk, like one of the distinguished speaker, Pak Toga, has mentioned whether B40 will be instituted. That remains to be seen. But 2022, next year, words are getting out over the places that the volumes for B30 might be increased. You know, as of this year, 2021, the forecast volumes, which palm oil that is being used as a feedstock to produce B30 amounts to something like 7.7 million tons as forecasted by Oil World. And this itself has a sustaining momentum to palm oil prices. And whether for 2022, the volumes will be increased, you know, like the word going around the town is from 9.2 million kiloliters or 7.7 million tons this year. Will it go to 10 million tons? There's a high possibility for it because, you know, as economies reopen, you know, the pandemic situation has also shifted towards more reopening towards endemic situation, as we can see from a few economies, including Singapore. So therefore, the demand for diesel will likely to be increased, and at the same time, blended mandates will also likely to see a support in terms of the volumes for that. And this is for the Indonesia context. And I think if we were to look into renewable energy for palm oil, that is one of the good strategy to sustain high palm oil prices, or rather, you know, to sustain current palm oil prices. I think we have to look at how EU situation develops. As we all know, that there's a lot of demonizing of palm oils. The anti-palm campaign is getting stronger each day, and then we also see that the RAD2 is going to phase out palm oil going forward until 2030. And the framework is already set in place, and some of the countries are already, you know, imposing that they would not use palm for renewable energy. So if you were to use numbers to express, you know, again, I borrowed from Oil World, palm oil imports into EU, you know, has actually reduced from calendar year 2020 to 2021 this year from almost 8.2 million tons to down to 7.7 million tons. Okay, that is basically a decrease of about 5.83%. And all this decrease basically happens on the food sector so far. You know, and a lot has been emphasized again on, you know, on this sustainability of palm oil, as well as also on the areas of food safety, which Mr. Harris has mentioned, particularly 3-MCPD and 3-MCPDG contaminants, as well as the mineral oils contamination. So these are the areas I think CPOPC may want to engage EU more directly, and for palm oil producers in this region, I think there is also a vested interest to treat this seriously and also try to sustain the level of volume imports into EU. So I think the other area that the prospectful part for palm oil strategies would be, I think, remains to be seen is what Ms. Liao has mentioned, or rather most of the speakers has mentioned, the prospect of this US biodiesel program that they are embarking on. Remains to be seen right now what EPA will do with the upcoming renewal, and whether that will be good for the biodiesel industry overall, including supporting palm oil prices.
Thank you, Bernard.
Thank you.
I think you all have enriched the meeting with with a lot of issues that are very pertinent to give us a picture of where the future market direction will be. Let me summarize one or two, and then I will ask Dr. Julian to start off with his additional question that I will pose to him. First, somebody mentioned the declining planting of oil palm over the last 5 years and so on will have an effect on future supply, whether it's a good weather or not, or fertilizer or not, because we didn't plant enough, then the rate will continue to be, the rate of growth will be slower. So what it means is that would there be enough supply to balance the demand, which is growing at about 5 to 6 million tons of oils and fats a year, normally by rule of thumb, experience in the past. So if palm oil is not expanding or producing as much as in the past, where would the other sources of oil to come from? And that is also a potential supply limitation, which in terms of price would naturally help keep price firm enough and not lead to price collapsing like in an oversupply situation. So that is one trend that I see. The second one just mentioned by Haris is you have to create value in how you market your products, either to pursue the sustainability route more thoroughly with a lot of adjustment and improvement added, and look at how they you can coordinate your products in the food side as well as the biodiesel side. All that is more like optimizing your product cycle to maximize revenue, which is also another way of helping the producers improve their profit or revenue or income, whatever you want. And then there is the all-important biodiesel program as discussed by many, which would obviously be a continuing, if I call it, strategy, because it definitely is able to create local demand enough in Malaysia and Indonesia that will have an impact on prices and all other side of the supply-demand equation. So then we have not dwelled enough probably on the what do you call that, demand destruction or challenges faced by palm oil, especially in Europe, with all the new so-called, either you call it legislation or rules and initiatives pertaining to all the green initiative that seems to have some implication or impact on palm oil demand. So my first question, just to elaborate a bit, we have maybe another 15 minutes before we close, is to ask Dr. Julian, you come from Europe, and how you feel, how much of a demand destruction for palm oil will be created by all these European initiatives, starting with RED2 for biodiesel limitation and all the new ones coming of deforestation-free products and all that. Are they really going to have a big impact on palm oil demand? which may even offset the current strong balance provided by biodiesel demand creation in the producing countries. You have some idea on that, Dr. Julian?
Thank you, Tan Sri. You can see me.
Yes, yes.
I think the answer is that I'm not saying this as a European or anyone who knows it. I'm sitting here in Kuala Lumpur after all, but the answer is, of course, the EU will go to zero for palm oil usage in biodiesel, and they will accelerate that process. They will get there quicker, I think. Countries are moving forward. Will they also reduce soybean oil? I don't know. The US will probably have something to say about that. The US certainly won't allow palm oil. So I think the answer is yes, they will remove that. But maybe because I'm not a planter, that doesn't worry me particularly about the health of the palm oil industry, because you do have this fundamental problem, which is that the demand is growing faster than the supply. And as you said at the beginning, Tan Sri, you're looking at, we used to argue over 5 or 6 million tons growth in palm oil. Now we're sitting here with forecasts that are between 1 and 2. And of course, in the background to that is we used to have this huge just avalanche of area coming in. And now that isn't there anymore. So where is the additional vegetable oil going to come from? The only high oilseed oil crops are canola and sunflower. We know already that they're limited in how they can expand. They are break crops. You shouldn't be planting them year after year after year. You should only plant canola 1 in 4 years. Area expansion is limited. So we then push into soybeans. We're seeing it already with the growth in Brazil, but the soybean is 80% meal, only 20% oil. So you end up bringing down the meal prices. So these reductions in demand from the EU in terms of their biodiesel, I think, isn't something that would worry me all that much. Other markets will come along. And in the end, I don't think you really want to be selling something for biodiesel. Biodiesel is incredibly useful in the way Indonesia have done it. Indonesia have done the best possible policy to do with biodiesel. They are supporting their prices. They are reducing, and more importantly, I think, to the Indonesians, they're reducing their imports of diesel. All of this is logical, makes perfect sense, and I think is a very well executed policy. For the EU, biodiesel doesn't make any sense. Net importer of vegetable oils doing biodiesel, why? You can argue about the GHG savings, but in effect, transporting vegetable oils halfway around the world to burn them inefficiently was never a particularly smart policy. And we forget that the only reason the EU did it in the first place was to support their farmers after the Uruguay trade round outlawed direct subsidies. So it's clear that they will shift away from it. And it's not clear to me that palm oil producers need to particularly worry about that. Demand is growing faster than supply. Palm oil, I always tell people, if you only had it growing in 10 hectares somewhere in Jambi, palm oil would be the most expensive oil in the world. The problem for palm oil is that it's just such a high yielding crop that it's always oversupplied, so it brings down the prices. But in terms of functionality, of course, palm oil is wonderful. Excellent frying crop, fantastic baked goods. All of these things are really where the strength of the product lies. And I mean, to pick up on what Harris was saying, that's really the main issue in my view, is that if you can show the qualities of it and you can avoid any of these MOSHA, MOA, 3-MCPD, these are the real threats in my view, because it's one thing if a crop kills an orangutan, it's another thing if you think it's going to hurt your own family. Those are the issues that I think will be a problem. From that point of view, that's where I would place the emphasis. I think biodiesel is essentially gone. I think even the US and EU biodiesel is only a stopgap measure. No one really wants to support biodiesel. It's just that they have these targets for renewable energy, and the only object we have at the moment is biodiesel as a way of doing it in HVO. Eventually, they want to move to electric vehicles. They want to move to alternative solutions. So I think, this transition is just coming maybe a bit quicker for palm oil than for other crops, but it's coming everywhere. So the focus should be on palm oil as a food crop where it has huge advantages. My personal, I'll stop in a second, but my biggest worry, as I think I said in the presentation, isn't on that, it's on the yield growth in the plantations. We cannot rely on cheap labor. And that's a good thing. There will be no more cheap labor. look at how Indonesia is developing, look at how people are becoming wealthier. This is a wonderful thing. The oil palm already did this for Malaysia. It's doing it for Indonesia. Now it will do it for other countries as well. So we must live with the fact that labor costs will go up. And how do we get around that? By increasing the yields of the companies. And even if we increase yields, there'll still be sufficient demand. So that to me is the number one issue as an outsider, as someone who doesn't own any oil palm plantation, would love to own an oil palm plantation. If I were buying an oil palm plantation, that would be my worry. What are your yields doing? How can you defray increased labor costs? As a kind of industry overall, my concern would be, how do we ensure that the food use remains strong and we stop any of these other niggling doubts that people may have regarding the quality of the product?
Okay, now I'm offering to the other speakers who may want to intervene with their short statements, in addition to what they have already presented, in trying to cover the theme of this discussion. How do we strategize on the demand side, the supply side, make sure that our market remains healthy in terms of remunerative prices and so on? What can the producers do to continue to improve their situation? That kind of thing. Any takers? Anyone to offer quick solution or quick? Yes, Unitan, your hand is up. Any more? Later, after Unitan, just to estimate the time. Yeah, since not yet hands up for the others, Unitan, you may have the floor for 1 or 2 minutes, please.
Yeah, thank you, Tan Sri. I have discussed enough about biodiesel and I don't want to discuss any further on biodiesel. I think there are a few big elephants in the room as always. And I actually want to emphasize on the word remunerative. If we look at how we want to be remunerative as an industry, I want to bring up a few things that have not been discussed at all until now. And that is equity in value creation. We have a supply chain that starts from smallholders all the way to multinationals. Today, there is really not a fair equity. And the issue of smallholders who are invisible in the supply chain, particularly when it comes to traceability. So one of the things that I want to encourage the industry is to use technology as a tool to move from years of being reactive to accusations that the West makes on our industry to be proactive. Use technology to prove our credentials. I think there was a mention about traceability. We now have access to blockchain-based technologies that can be deployed at almost negligible cost or probably savings to the industry. Just one point about sustainability, and that is what will bring remunerative benefit to smallholders. Today, even if they produce sustainable palm oil, they don't get remunerated because they're not visible in the supply chain. So that's one strategic direction that I'd like to emphasize. The second is about the issues with respect to food safety. And I echo the feelings of many panelists that 80% of palm oil is used for food. We here again have to be proactive. We have access to very low-cost technologies to mitigate food contaminants, 3-MCPD and GE. Yet, we as an industry are so slow to respond to these challenges. I believe that the third strategic angle of carbon tax, which I alluded to, would actually be a very holistic solution to everything we do with biodiesel. Because if we manage that from a greenhouse gas and an environmental perspective and can prove, then I think we can see much more remunerative prices and a better recognition from our crop rather than all the maligning that we are so used to and then keep reacting. Thank you, Tan Sri.
Okay, any more? Did I see a hand up from Pak Togar? No? Anyone wanting to say a few more words before we open for a look at the question being posed by participants? If not, let's see some of the questions. Maybe we can continue looking at that. Ms. Chen, You have mentioned several positive factors for palm oil in the next 3 to 5 months, I suppose, including US potentially becoming net importer of soybean oil and China reducing dependence on imported soybean meal. Do you think that there will be enough palm oil supply in the next 3 to 5 years to meet this additional demand? Yeah, Ms. Chuan, I know you can handle this.
Thank you, Tan Sri. Thank you for the questions. I think I'm looking for more than a midterm, all these changes will come in and could be an additional demand for palm. I think bear in mind also, we have to take notes that for the RED2, potentially palm may lose some market shares. I think I did my own estimations. I don't think that we will lose the whole 4 to 6 million market. As I think, as Mr. Winton mentioned, we are a very creative person. Eventually, we may use some of the waste oil to penetrate into Europe. So we may lose about 2 million tons of markets in India, in Europe, and we may lose some market shares in India if really India have been encouraging in terms of their domestic oilseed production, and also if their oil palm missions is actually successful, just putting in about 50% success rate, we should see some lower imports from by India as well. But I think all in, we should see that these additional demands come in at the time that we really need to look for new markets to at least to house the additional 2 million that we are maybe losing in the Europe market. So of course, on top of that, with the versatile usage of palm oil, I would say that the palm oil demand is set to be in the increased time, and with the limit on the productions. That's why we think that the prices, the old days prices of like an average of 2,000 may not be seen in any time. We are seeing cost increase to about 2,000, 2002 now. So I would say that the average price going forward will be at the elevated level as compared to last couple of years or at a historical level. Yeah.
So there is apparently a long-term shift happening in terms of demand, supply, and price relationship that will trigger a step jump in normal price of palm oil, perhaps going into the future, instead of leveling off at 2000, 2005 as in the past. Now we are looking at a new established level, maybe 3,500, 4,000, or even thereabout, simply because input costs have increased, labor, and also the demand supply structure has changed, and we are going to take a long time to kind of recover the gap between strong demand due to population increase and gradual supply or limited supply based on lack of investment, especially in oil palm. Perhaps soybean investment may catch up a little bit, but there are also limitations. Anyway, next question, please, if you have any more. I want to finish with 2 more questions or 3. Yeah, with current restrictions shown slowdown of oil palm plantation expansion, I just mentioned, can we expect a long-term paradigm shift in average CPO prices to above 3,000? I have tried to infer into this. Anyone else wanting to answer this question? Not to direct to anybody. If not, we move on to the next question, since I've already hinted about this paradigm shift or demand shift and supply shift affecting a price shift as well. Next question. Oh, sorry. Yeah, next question. Secretariat. Yeah. Dear Pak Toga, this for you, Pak Toga. For B40, there will be increased demand CPO for biodiesel in Indonesia by more than 20-25%, while the production remains slightly steady, increase only by 0.5 to 1 million tons per year. Is it a good choice for Indonesia with this regulation while the CPO price will keep remaining high? What is GAPKI's point of view with this? And also with Indonesia change to EV car, electric vehicle car, what is GAPKI's view on the biodiesel demand in the future? Wow, we say about challenges, right? This is a challenge question for Pak Toga.
Yeah, thank you. Thank you for the question. Well, Indonesia has a system or with the CPO biodiesel blending supported by CPO fund or BPDPKS, is regardless what is the price of CPO. And because that the difference is actually based on POGO. The POGO would have effect on the biodiesel program instead of the palm oil price itself. And the demand, and again, we've been talking about demand and supply, and we've been talking about the slow growth on palm oil. We've been talking about how it's like just now shifting the demand from Europe to somewhere else, which maybe the B40 is the answer for that, because by the time that Europe has no palm oil usage on their biodiesel program, and that by the time also that Indonesia is already going into B40, which is a whole the possibility of the demand in Europe is being translated into the B40. But again, the growth production is something that we need. I guess everybody here in this panel is already agree on that, and something that we need to maybe reformulating the whole supply demand things. Food versus fuel, food safety. Asha is mentioning it in the shop. I would say that the years to come will be very, very challenging. For this palm oil market, in terms of in connection with the soybean and other vegetable oil. We hear also from the Thomas Maple video. Again, where the question is where, and how the demand would be fulfilled with this lack of new crops or new planting on palm oil. So I guess that is a big question, I guess, for all of us. And on the electric vehicle, everybody is going towards the electric vehicle. Whether or not that is going very strong or very fast in Indonesia, something that needs to be seen, right? I don't really think that in 5 years' time, the electric vehicle population will increase so much in Indonesia. But if that is increased, it's also help our concern on the slow growth of demand production. So it's again another equation that we need to see, and I guess we'll be evaluating in year by year where palm oil stand in the oil vegetable oil market. Thank you, Dr.
I think we have covered enough issues both during the presentation and during this panel discussion. To be fair to the participants who may have worked hard to put out or post questions, let us have one last question. Whoever is lucky to have the question addressed, this is it. Whoever is asked, thank you very much. The question is to Pak Fadil and Pak Toga. Obviously, you can read the questions together. It was reported recently that Indonesia is going to restrict export of CPO for more domestic and value addition. At the same time, Malaysia said they have no plan to stop export of CPO. There are also export duty differentials between the two countries. Both countries produce and export around 80% of global palm oil. What is your comment of possible harmonization of policies between the two countries? Yeah, Either Pak Fadil or Pak Toga. Go ahead.
Depend on our ministerial meeting later, maybe.
Yes, we meet on the 4th of December. Okay.
Well, I guess the harmonization of the policy is been on the talks for many years since the CPOPC or CPOPC is being created. So we'll see whether that is will be something that we really urgently need to do, from for both countries. I guess that's my answer to that. I don't know if Pak Fadil will add.
Yeah, okay. If I might add to this, Pak Togar, saying first on the restriction of export of CPO, I think that's more like what I call it, wishful thinking, yeah. Because in the reality, I think it is going to be very difficult. Yeah. Yes, we support the development of the downstream industries, or we call it here hilirisasi. But the way we do it, not through the ban of export of CPO, I think, because it is going to be very difficult to be implemented also. So I don't see any what I call it concrete action or plan how we gonna do it by banning export of CPO. I think that's the first question, and then the second question, in 2013 or 14 in Bali, I was presented paper on the harmonization of the export tax in Malaysia and in Indonesia, because at that time my analysis show that if there is any difference in the policies, especially with regard to the export tax between Indonesia and Malaysia, this is going to create the so-called winner and loser between the two countries, and then ideally, if we want to really influence vegetable oil market in terms of supply, demand, and prices, I think, and then to also get benefit equally in Indonesia and Malaysia, then we have to have a kind of similar export tax, or now maybe export levy scheme in Indonesia and Malaysia. With that, I think there will be, what do you call it, some sort of the not tacit collusion, of course, but I think market will be better in terms of the certainty. That's what I think. But of course, we have Indonesia and Malaysia always have a different interest, in terms of policy in CPO, industry, as well as of course the similarities, and that's why we have CPOPC here. Right? So, but yes, I think ideally there should be a harmonization, so that we have like a stronger, what I call it, position VSV market, global market condition. Thank you.
Yeah, maybe to add, harmonization is a broad term. Maybe what we are looking for is no conflicting policies between the two countries in this area. That would be already very helpful. Okay, so thank you very much. I want to thank all panel members for their participation, their time and contribution. And also, I let Dinka to do the rest of the thanking in her closing remarks later. So for now, I think we have exhausted within the time given the panel discussion session and be able to answer a few of the questions posed by the participants. We still have about 159 participants remaining to hear this, but I can assure you that if we download the records of these proceedings in the proper channel like YouTube and our own website, those of you can continue to revisit the discussion or the presentation, or encourage your people to, view the presentations, and they would be a good resource or reference point for more information on the subject that we deal with today. So with that, thank you very much. Back to you, Dinka.
Thank you very much, Tan Sri. That was a very interactive panel discussion. So we have come to the end of the OCOPOP, or Opportunities and Challenges Palm Oil Producer Countries webinar. On behalf of the CPOPC Secretariat, I would like to thank Bapak Edi Yusuf from Indonesia's CMDA and Dato' Rabi from Malaysia's MPIC for their opening remarks. Thank you very much to all our notable panelists and speakers, and to Tan Sri Yusuf Basiron once again for the interactive discussion. Thank you especially to all our attendees for your participations and questions in this webinar. And just chiming in with Tan Sri, we can stay connected and engage through CPOPC social media handles and all of you can follow our Twitter, which is at CPOPC.org, all in, sorry, not org, but _org. Let me repeat, at CPOPC_org, all in caps, and get connected through there. And all presentations will also be uploaded on the CPOPC website in some days to come. And today's session will also be uploaded on the CPOPC YouTube channel. So please pay us a visit, pay our social media accounts a visit. And if you have any further questions about the event or any other future events of CPOPC, please do not hesitate to contact our secretariat. And lastly, I'd like to say, wishing you all the best. See you next time. And everyone have a good day. Please stay healthy. Thank you very much.